Yo, yo, yo. Alright, that was a little weird. Alright, we're gonna get straight to it. It's Sunday, so I usually go to church. So, I'll probably be live for like 5-6 hours this fine morning. Then, and then after that, I'll be live tomorrow for sure. Then we're just gonna do this every day. So this has been 6 days. Still gonna be backtesting judo swings right now. That's what I want to backtest real quick. So we'll do that for a little bit. I'm just gonna backtest like type of judo swings within the market. Then we can go from there. All right, let's try this. Let's see if it's. Oh no, it's still gonna be slow. It's still gonna be slow. So always just pauses. Always. There's no avoiding it. No, but the 2 days ago I had a crazy stream and it's not uploading to YouTube, and I'm looking kind of a little bit. It was such a big stream. I want to upload. I want it to upload, but it's not uploading. Kind of disappointing. Maybe it's just waiting. I'm gonna check on it. Cause I think it was a good stream. You know, I was live for like 19 and a half hours. It's not uploading. YouTube. It's whatever. All right, so this day it looks like we have, let's see, economic calendar. Definitely CPI or PPI. Oh, what? Friday at 6:30. Friday 11th. What? What type of news was this at 6:30 a.m.? What's all this? What's all this right now? All right, whatever. Okay, let's get straight to it. So we have a big imbalance within the market. Overall structure looks bullish. We just liquidated this high, so we're just taking this high. We have this high that we could look for next. Overall, we put a failure swing in the market. Do we have SMT? If we have SMT, that would look little bit better. We don't have SMT within the market, so I would have liked to see an SMT there if I really wanted to have a strong bullish bias, but I don't know. This just looks structure. This just looks like bullish structure. We have a nice fair value gap that's getting respected. We're in a 1 hour fair value gap, 15-minute fair value gap. I'm looking at this order block Or that's not the greatest order block. Possibly this order block. So if that fails, then I think we're gonna go to these lows. In 30, we rebalanced. I think we might want this low. Let's look at the highs. Do we have S&T there? I don't like that. Usually it's not like that. We gotta have S&T at these. Yeah, we do. Little one. Alright, I want to see this low. The low got taken. So I think that order block is probably where we're heading. It's not showing up on my 1 minute. Okay, let's see if we head to that order block. Okay, I don't think we want to get. I think we're bearish for sure. Yeah, I would look for these lows, honestly. We had to have taken those on ES. No, I mean, wait, we're creating a double bottom. Probably PM short. PM sell model. Yep. Order block right there. Fair value gap. No manipulation. What time are we trading that? 2:30. That's your silver bullet. Woo! -4. -4. And then like -2. -2.5. Let's go, Tino. Alright, so we had a pretty volatile London session. $8 a.m. We've already had market structure shift. I'm looking at this imbalance for sure. Low-hanging fruit. Alright, we mitigated it, and we've had chase day delivery right there at market open. I kind of want to see if that's a new day opening gap. But we have, this doesn't look as low resistance, you know? Let's see, I want to see a 15-minute SIST. Okay, we've had a 15-minute SIST too. Yeah, let's see what happens. Okay, yeah, this looks a little suspect. It's kind of we already are in a discount. Were we below midnight open? Well, we came right back to New York in midnight open. Let's see. We could have a reversal here, but I don't think so. Yeah, we're pretty. That's yep, 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 yep. Consolidation. Ooh, accumulation, manipulation, distribution right there. There's definitely gonna be a new day opening gap right there. So what happened here? We had a fake change state delivery. Were we rebalancing a 1 hour? Immediate rebalance into these down close candles. They're at market open, so nice order block. Nice order block there. Because I mean, I like to look for 9:30 change state delivery, but you can't be like a robot with it because we're rebalancing in this fair value gap and we're coming into these down close candles there. These down close candles there, and then we could look at ES for ES is for sure coming to a imbalance there, kind of an immediate rebalance right there. Or do we? Is there a gap there? Oh my gosh, to the tick right there at 9 a.m. And then we're just all on the right side of order flow. We just expand higher and higher. Yeah. I kind of like this. I usually guys try to journal when I backtest, but right now we're just gonna chill. I'm just gonna chill and look for draw and liquidity. Do you do a weekly analysis on NFP week yet? Yeah, it's gonna be uploaded. I'm gonna upload it. Alright, dude. I had that crazy stream and I wanted to get uploaded to my channel, that like 19-hour stream, but it's not getting uploaded. It's not getting uploaded. It says it's uploading, but it's just such a big stream to where I don't know if like my computer can handle uploading that, but it's cool. But yeah, I do have a weekly. I don't know. I did my homework early. I have up until July 12th because I'm gonna be doing daily uploaded. Yeah, it's called Market Review. It's scheduled today. Premiering, so you can check that out. It would be in my live stream too because I did it while I was on live as well, but for some reason my live stream just isn't uploading, probably because it's just such a big file. All right, here's kind of a day to where like we do have bullish order flow here, but we could have like a big sell off, honestly, if we take this high. This got to be a new day opening gap. I do want to check that. I don't know. I think new day opening gap is like low key the secret sauce the algorithm's gonna refer to, and like if we don't have like a nice institutional PD array, such as like a fair value gap or like an order block, it's that new day opening gap. It's that new day opening gap. The only thing is like what day is this? Was it the 15th? 16th. Let's see if it shows up. I might have to switch over. Let's look at this day. I mean, here this might have got you. This might have just made you take a loss. Honestly, you might have took a loss on this day. You might have took a loss. If you're looking at this new day opening gap at 9:30, say, hey, we're gonna distribute lower. Could have taken a loss, or you could have taken low hanging fruit, or yeah, because then that would have had a 15-minute change day delivery. And then we come back up, we reclaim it again. But let's look at the 16th. Oh, look. Wait, did we do that on this? Wait. Is that the same chart? That is not the same. Oh, I'm still at 10 a.m. That's why. Yeah, we come down to a random level. And then we just splice higher and close at a random level. What was like the silver? What can we got engaged in? And 950 macro. Come almost about down to 830 opening price. 930, 953 candle. Wait, does that put a high in for the day, for the session? If it does, the 1034 candle. It does. We put a high in right there. Come all the way back down. And we have a sell model here. What time does this happen? 2. Oh, this is FOMC. This is FOMC. This is FOMC, so we want to be looking to trade AM session. What's good, homie? I took a trade Friday on using new day opening gap. Nice. Yeah, look at this FOMC. This is actually a nice FOMC. I'm not gonna lie. Like this is 250 points. We come right into that fair value gap right there. And where do we stop on a dime? New day opening gap. I mean, I feel like new day opening gap is something that like if I were to backtest and continue to backtest it and like have conviction, like say this is like it always has to align with a PD rate, you know. So the fact that we have a fair value gap right within that new day opening gap, that can be your conviction. I mean, here, this new day opening gap just doesn't really make sense. But this one is within a fair value gap. So that's why that fair value gap is sensitive. And then we're fair value gap in, fair value gap out, signature at 230. Oh my gosh. Like you have all those factors, confluences for you. We're in a deep discount. You know, it's FOMC, so it's going to be manipulative. High time bias is bullish. We're not gonna put a high day like that. Like curious to see. We'll say from like here. Yeah, 370 points in the matter of like an hour. That's crazy. Well, it is FOMC, so. The problem is there's not really any like good entry unless we go to the 1 minute. 1 minute doesn't show every new day opening gap. There's no like good entry here because it's just a balanced price range. It's FOMC. That's why like on FOMC, like sometimes you'll get like entries, but sometimes you won't. Like if there's an SMT here, probably I can't really check. All right, let's go to a random month. Screw it. Let's do this month. I feel like I've been on this month before, honestly, but I pull my journal. I don't think I have. Yeah, I have. I've been on this month too. Dude, if I keep on doing this for like 3 years straight, there's gonna be points where like I've been in price action and I've seen forever. But I mean, there's always gonna be new price action in backtest. I'll be right back. I really wish that TradingView had a new week opening gap indicator. I want to check real quick. I don't think that they do. Or sorry, FX replay. Um, Also, I like using TradingView, but then TradingView you can't really switch back as easy to NQ and ES or do the bar by bar as easy. You know, NQ. The sharp turn are. What do you mean? Just rebrand. Okay. I have not been in 2019. Oh my gosh, like it's this like new day opening gaps. I think they might be it though. I'm gonna be straight up. I'm gonna be straight up. And the thing is like it's not like you can just use the new day opening gap because if those align with PD rays at certain times, whew, then you really got some sauce right here. Like look at this. We have probably consequent encroachment of this puppy. Oh my gosh, beautifully delivered constant encroachment on that. What do we have? An hourly. It's not as clean as an hourly order block, but maybe like a nice 4 hour. Uh, almost at mean threshold of that order block. But we have these three down close candles that we're digging into at 10 a.m. with taking this low right here. Oh my gosh. Let me create it. Let me create a little I'm gonna try to. I'm gonna do Notion. I'm gonna switch it up to Notion. I need to I need to finish those notes. Wait. Oh, look where we repriced right to. Hold up. Oh, not actually. I need to get some more water. Dang, I feel like I haven't done a single thing and I've been live for 30 minutes. And then look at that. So, London low a day, New York continuation here. And we're coming back down right to the new day opening gap with new week opening gap. Fair value gap in, fair value gap out. Balanced price range. Order block right there. Low resistance liquidity signature. That right there is it. That is it. That is it. That is. That is. That is financial freedom right there. That is early retirement right there. That is everything that you need. That is just absolutely gorgeous. Absolutely. Absolutely just phenomenal. Just lovely to see. I need to look at that every single day before I wake up. If it's not exactly that, I'm not gonna take it. I'm playing. Okay, we didn't come up to this order block right there, or sorry, fair value yet. Yeah, this looks pretty bearish. I would want to see this get visited or not. I'm new to trading. Which concept is better than all concepts? None of them. None of them are better than the other. It's all about how you use them and what's best for you. There's no best way. There's no best way. If someone tells you there's a best way to do it, then they just want to sell you something. Alright, so we swept sell side here. Come back down to this order block right here. I would recommend ICT concepts though. I would. But I mean, if people say that, oh, this way's the best way to trade, they likely just want to sell you something, you know. And okay, so even if you do have concepts that are better than the other ones, then you're just gonna have a big ego, and you don't want to have a big ego in this. At least I don't. I would come back down to that order block. Now we do have bullish order flow. We're coming back down lower. Here, wait, where's 9:30? 9:30. We just have expansion. 9:30 we expand. I would assume that ES is in a new day opening gap. So I don't love trying to backtest on TradingView, but it's kind of what I want to do to see these new day opening gaps. Screw it. We'll go to ESM 2019. I think it was the 20. I was like, what? I think it's the 22nd. Yeah. Fall right short of one. Where are we at? 9:30. Well, ES didn't really expand there. Yeah, ES was in a new day opening gap. Kind of a more consolidative day, and then look at where we respect there, and look at where we're closing. Wow, that's great. I don't know. It's just like, obviously it's not the only thing the algorithm's gonna refer to, but it also is. Like where else do we just randomly stop? You know. Other than that, I mean, I've been backtesting on live. That's kind of what we been doing. This balanced price range come lower. Off new week opening gap, new day opening gap. Boom. That's long. Then we have expansion. We come back to mitigation right there. A mitigation right there, and then we expand higher up to these highs. Where's the low resistance liquidity? Low resistance liquidity signature after we have high resistance liquidity signature. It's just more likely that we head there. And then we liquidate these highs. We take these buy stops in that new day opening gap. Then we come back down to this new day opening gap. Then we come back up. Just generate liquidity. Come back to this order block. Then we come back lower. Take these sell stops. Rebalance this fair value gap. And then we expand off this new day opening gap to this new day opening gap. And then we come back here. Oh, what's good, Michael? How you doing? I want you to review my strategy. I'm sorry. I don't want to review anyone's strategies. I don't want to review anyone's trades because I mean, like, I did that. Oh, we also have new week opening gap right there. Constant encroachment. Wow. People have asked me to do that, and I just can't. All right, we're in a deep premium, and right now we're in the new day opening gap. So I would expect this to be a buy day here, but we might want to come down to these lows. All right, it's 9 a.m. here. See, now that one doesn't show up, but it shows up on the 15-minute. The 7-minute will show all of them on the low. What I do, Tino, is I have a Discord server that I have for myself that I backtest within, and then I also have a Notion. But I've been using Discord recently, and then I'll just like create a category that says like seven backtest, and then that's how I'll do it. I also have a Notion open. I just want to do Discord. My monitors are bugging here. I gotta close this just to reopen it. Wow. Oh, it's over here. So we respect that new day opening gap off of open. I do want to see these highs at some point. It's because we want to come down to these. We haven't taken this draw. Okay. We want to take this draw, and then where do we reprice to? Wow. Wow. So we had a like pretty deep premium there though. But we come right to 8:30 open. But like true day open, we never had manipulation. So what does this daily candle look like? Little wick on that. So that's gonna be a good order walk potentially. $10.50 macro. Oh, probably a nice trade there. Maze 5/. Tomorrow's gonna be a nice day to catch trades. We don't have any relevant news. Let's look at the economic calendar. For me, I want to see red folder news. If we have a Monday with no red folder news, I think we're more prone to consolidate. Powell speaks tomorrow and Wednesday, or he speaks Tuesday and Wednesday. Then we have CPI, and then we have PPI. So I'm definitely expecting just consolidation. I'm definitely expecting just consolidation tomorrow with being at all-time highs. Yeah, I don't think we're gonna have anything crazy. Huh. So we want to take this low resistance liquidity before market opens. Oh my gosh, my bad. That's I. It's like one like accidentally mishap on TradingView, and then you're all the way back in like the current data, and then you gotta go all the way back. They make it. I feel like they make it too easy to just like mess up where you're at. Where we at? We're at May 24th. Well, let's go to so we're trading above that, above the new week opening gap here. So trading above a new week opening gap there. Yeah, I'm gonna start off just using the 7-minute chart. It shows all of them. Trade above that at 9:30 where we open right here. We already have traded above this fair value gap here with the new fair value gap right there. We just seek expansion just to a random level though. We just expand to a random level. Nothing of significance though. At a certain time of day in that 950 macro. 950 macro. order block. Nothing really crazy there though. But here we have a fair value gap in line with the fair value gap there. That's gonna be a more sensitive fair value gap right there. And then we have low resistance liquidity signatures here with this, and then this fair value gap gets respected here. And then we're repricing to a bit of nice institutional order flow entry drill right there. I think it is. I don't know, man. New week opening gap, straight to new day opening gap. Like where the high and low of maybe not the day. Well, I mean the high and the low of the day. Where are they at? New day opening gap, new day opening gap. Where the high and low of the day of New York session, new day opening gap and new day opening gap. I mean, I don't know if it's. Oh, why is my indicator not working? No. Wow. It's just stopping. And there's always got to be something wrong with this trade debate. Are you in college? I'm not. Is this contract about to expire? I don't know why it doesn't want to show more than this. Is it showing the 5 minute? Oh, it just stops. That's annoying. So I guess we just gotta go to a different contract, or we'll see if it. Oh, it's just gonna stop. Oh no, we're back. I don't know why it's not showing the gaps. He's had to give it a minute. I've noticed that the big explosive moves are gonna be off of the new week opening gaps, and then likely like maybe the high or low of the day are gonna be off of new day opening gaps. New week opening gap, the new day opening gap. You have an intraday move. So good. I think a downside draw is this new week opening gap right there. For me, it's not showing on the 7 minute. Is that where we go to? Yep. Monday, Tuesday. Tuesday we manipulate Monday's range into a new week opening gap, then we reprice where to this new week opening gap here. Thursday or Friday. New week opening gap. New week opening gap. Accumulation. Nothing there. Where are you from? I'm from Colorado. United States. I appreciate it. Well, welcome. Welcome. See, I don't. It's like more of them show up on the 15-minute chart than the 7-minute chart, and then more show up on the 7-minute chart than the 5-minute chart. I think it's because if we're using the contract code, it has more data to go back to, so it has more gaps to refer to. That's what I would think. Friday, high day, and a new week opening gap, new day opening gap. We gap lower Friday to Sunday. I want to see how we respect this throughout the week. Alright, so first we create a big sell-off, and then we're repricing wedges to a new week opening gap. Tuesday low of week, or Monday low of week here. Alright, let's see if we, okay, so we close above this. Look at Tuesday. Wednesday, I think Friday we might want to come back here. No, oh my gosh. It's a big expansion week. We open right here. Monday puts in the low of week. Big expansion. Tuesday, we open. Market opens right here. And we just rip. Wednesday, come back here to this new day opening gap. Buy model there. We come back Thursday. We come right here. Friday. Oh, right there to a new day. So we just had a big range week. A big range. So maybe we don't get too much here, but I don't know. It's going crazy right now. New day opening gap up to. I mean, we got a bunch of stuff right there. Kind of lackluster there. We have CPI. Let's see where CPI puts the high or low of the day. I mean, even news. Wait, is it CPI today? No, it's tomorrow. We had PPI. But PPI is not a red folder. But look at where we put the high of the day. Low of the day, most likely. Huh. So you trust low days, I guess. Lackluster CPI there. Tell me this was CPI? Wow. I think all of like the overnight session or like after session sell-offs, they're all programmed with new day opening gaps. Look at that. Pretty much off of that new day opening gap, where right to constant correction with this. And then we just come back in the middle of the range, back into this new day opening gap, new week opening gap. Ping pong between two new day opening gaps. More consolidation. After that big range week. A 30-week span from new day opening gap. Explosive overnight session. Oh my, that's what we were waiting. We were waiting for this day. Is this a news day or something? This is pre-FOMC too. Wow. So we have FOMC tomorrow. Or put the high of the day at, I don't know. Okay, let's get collected before. Oh, yeah, it's about to be FOMC. Let's see if we can try to predict overall underlying order flow. What is order flow? I'm scared to go to a daily chart because there's times when I go to a day chart and it like spoils the price action. It like already will show the daily candle. Oh, for now we're just gonna stay on this time frame. All right, so we have this high right here to look at. We might want to draw into. Then we have this fair value gap right here. That we might want to manipulate into. It's looking like we could reach for these highs. We have accumulation here. We might want to manipulate lower. So I'm definitely looking lower no matter what. Either we're going to manipulate higher first to then go lower, or manipulate lower to then go higher. That's what I think. Like, I don't think we just get upside, because we have areas of fair value to return to. So I'm looking at that in particular. I think we're just going to consolidate here. Wow. Wow. Almost returned to that 4 hour, almost slightly short is what we refer to. I mean, this new day opening gap. New day opening gap. Oh, oh, oh. We fall short of these highs, so this new day opening gap right here is gonna be a high probability draw on liquidity for probably tomorrow or the next day. Depends on what we do. So as you see, we came up, fell short one, displacement, change state delivery, sell model, boom. We break through this, recalculate within that one, and boom, we head to this one right here. Back at this high, offer fair value. Also, equilibrium of this probably range right here. And I would say maybe this range. So right off rip, I'm looking up here, but we come back down to this fair value. This looks like we might have consolidation. We just had big FOMC day. What other type of news events? Yeah, we don't really got much. It's a Friday too. Oh, that's where it's currently at. June 19th. I gotta use U. Do new day opening gaps work on the first? Okay, they do actually. Yeah, this looks completely different. Okay, yeah, so this was Wednesday. I'm looking at that new day opening gap. We'll see it today, I think. Wow. What a day there. Monday, do we have any red folder news? No, that's why. And Powell speaks. Powell speaks. Mr. Powell speaks. So, I mean, Powell speaks this week as well, so this could be like a precursor to what, or this could be like a refresher on what maybe could happen. Oh, that's a nice. We entered that at what? 9:30. Ooh, with low resist liquidity signature there. Oh my god, with a fair value gap, with a breaker. Oh my gosh. New day opening gap. Look where you reprice right to right there. That was a little volatility injection there, eh? 9:30 opens. I want to see. I want to see higher price. I want to see this new day opening gap. Or just consolidation. I think it's easier. I think it's better to like test your draw and liquidity on like FX replay for sure. It's a little bit harder on trading view. Just accumulate here. You know, what's the news calendar? Come back, new day opening gap. Boom, new day opening gap. $9.30. Whew. We close below this one. We don't want to go back up. And then boom, we reprice all of this low resistance liquidity. And notice how this was generated right above this new day opening gap. Which is exactly where we end up repricing to. Oh my gosh. And today, we gapped up. Holy. $8.15. Oh yeah, we probably want to see this. So what do? We hold that new day opening gap very nicely. Come back up, 10 a.m. Boom, displacement, balanced price range, and then boom, immediately repricing to these lows here. It's NFP week too. Like even NFP. Boom, nice high. Come back down to this low. 9 a.m. I think that we want to see this area. No, we don't. And that's why, like, I kind of wish I had more context than just saying, oh, I want to see this level. Because we have a fair value gap here with a nice maybe 4-hour order block there. with a nice 4-hour order block. Like if I have all that, then it's like, yeah, we probably don't want to do that. So I think I'm curious to see, because like I've just been kind of delving into it. I'm curious to see how they work, or how they aid me like real time, because like I don't know, I haven't really ever like forward tested it. Alright, I'm gonna finish my notes from that one video, and then what's good, Lottie? So I don't know if that was offensive. I apologize. What's good? Where are we? News. Mr. Ali Khan? Oh, that's probably like your best friend. Are you guys mates? What would you say? I love Ali Khan. I don't know. I was just curious. I'm excited for the week. Oh. I'm curious. I'm curious. I was just thinking. Another bullish week. Bullish week every week. Honestly, bullish week every week until election. And then that, like the election week, I ain't trying to be like black swan activist, but I mean, there's gonna be some form of manipulation. 100%. 100%. There's gonna be some overnight, like just absolute meltdown, and then or there's gonna be some overnight manipulation higher. There's gonna be consolidation before it. I mean, Loki, there was a. I was like, I was actually like looking at the 2016 election. Sorry, I would get a little bit distracted, but it's November 2016, which would be H. Well, no, it would be U. I think this was it. Kind of like election stuff. I mean, I think this is when Trump got a. Yeah, this is in one day. That's in one day. And look even here. Look at where we go to though. Huh? Yeah. Where the algorithm wants to reprice to. So we'll see. All right, low key. I'm gonna stop. I don't really want to. I don't really want to like backtest new day opening gap and new week opening gap as much right now. Cause honestly, I feel like it's a good thing to see, but it's also like, you know, it's a good thing, and I just understand that the theory is there. The theory is there. Like, oh, I've seen high and low in the days form at these new day opening gaps and new week opening gaps. But if I just go in the charts and be like, oh, new day opening gap, we're just gonna stop here. No, there has to be context around it, and I feel like it explains like things that you just don't see in the normal chart. Not above, buyers below.
All right.
All right, I'm gonna try to finish this stream. That's like 3 episodes. I got time.
Right, guys, welcome back, and a happy Eid to those who are celebrating. I've got quite a few slides to get through today, and with the Eid celebrations of those who are celebrating, I've got quite a few slides
Happy Eid? I don't know what
to
that
get
is.
through today, and with the Eid celebrations over the weekend, I've been very busy with family, so I'm going to spare you the monologue today and jump straight into the economic calendar. As you can see, Monday, New York session, USD high impact news. Tuesday, New York session, high impact news. Wednesday, CPI for the pound, so during London. Thursday, New York session, monetary policy and bank rate votes for the British pound. 8:30 a.m. unemployment claims for the dollar index. We've got a lot of news on Friday in terms of manufacturing PMI, so we
Oh
should
my gosh,
expect
that
a
is a
lot of
lot.
volatility towards the end of the week. Moving on, we have the dollar index daily time frame. Now, we were aiming for the minor buy side liquidity above this swing high last week. I said that would be a likely draw on liquidity next, and we did in fact hit that. If you recall, in one of the previous mentorship videos, I think when we were around here, I said we were likely to sweep the sell side liquidity below this swing low and dip into the opening price of this down close candle that sat at that 25 DRT level. Now, on this chart with TVC, we obviously left that open and price ran away. Someone on Twitter actually pointed out that we had a divergence on the underlying futures contracts for the dollar index. We did in fact dip into the opening price of this order block and sweeping the sell side liquidity below these lows before running higher. Based on that, I would like to see the dollar continue higher to run the buy side liquidity up here and dip into that liquidity void. I like how we've dropped lower into this order block and completely rebalanced this buy side imbalance and then ran away, breaking back up. Above this swing high, currently closing below the 25 DRT level. But again, as I said earlier in a previous lecture, when we didn't break down the way I would have liked to have seen price break down when we were over here, I said we're likely to go into a seek and destroy, and that's exactly what we have seen. Now, again, in the previous lecture, I was speaking about how we trade inside of a consolidation, and I mean, this is a beautiful example of how DRT levels really operate in the market. We identified that this was the dealing range high and this was the dealing range low. The reason being is this high swept buy side liquidity to the left, and then we've continued lower, creating the dealing range high and the dealing range low down here. Now you can see that we had these relative equal lows that sat inside of an extreme discount, and we swept that here, digging into this terminus gap, which sits at the 25 DRT level. I also spoke how we left this buy side imbalance open over here, so we didn't completely close it, and this is very typical in seek and destroy. We then ran higher, sweeping the buy side liquidity above these relative equal highs, again into our breakaway gap, which also sits around that 75 DRT level. And again, we just come shy of completely rebalancing the sell side imbalance. Why does this happen? Because the algorithm is leaving it open so that it can come back to it at a later date, right? Because its two primary functions is to run liquidity and to rebalance an efficient price action. So what does that leave us? Well, down here, we have left sell-side liquidity below this swing low, and we've run lower to completely rebalance that sell-side imbalance. Notice how we've accumulated inside of an extreme discount below these lows, and then price really rips higher, back into an extreme premium, and sweeping the buy-side liquidity above this high, and fully rebalancing the sell-side imbalance to the left. Again, there's been an accumulation of shorts and order pairing with the buy stops above these relative equal highs, and then price moves from an extreme premium all the way back down to an extreme discount. It actually comes just shy of the midpoint of the extreme discount region and into this down close candle as an order block, which also overlaps with the initial gap that was created inside of the initial dealing range, and the consequent encroachment of that level also overlaps with.
Yeah, that's nice. That's nice. So we have this. We have okay. I kind of want to make. I'm gonna make a new. I don't want to delete all these dollar drawings, so I'll create a new tab and then just delete those drawings. Hopefully it doesn't delete all my other chart. I don't think it will. Hopefully not. Let's see if I delete it like that. Does it delete it? Oh, it does. Why? Why is it delete it all? Whatever. I'll just do it. Ooh, that's nice.
The midpoint of that extreme discount. Price then runs higher, and notice here that it's not getting above the equilibrium level until this candle here. The following two candles, you can see how we've wicked back down into a discount, but prices fail to close back below the equilibrium midpoint. And we found support at the mean threshold of this last up close candle, which will act as a breaker. Where does this sit? Inside of the measuring gap, which we find at the midpoint of the dealing range. Price then runs higher. and breaks through the 75 DRT with a close above it. If we look left, we have that breakaway gap sat at that 75 DRT level. Touch it perfectly there, find support, and then run higher to that minor buy-side liquidity pool that we outlined last week over here. So now we've cleared the major buy-side liquidity pool inside of this dealing range, and we've swept the major sell-side liquidity pool below the dealing range low. I'd prefer price to stay firm up here.
Then we come back down to this fair value gap right there. Balance price range. Some more displacement. Then we come up. Consolidate. Now we're displacing.
I feel like we've done the majority of the damage, and looking at the futures chart for the dollar index, we've already swept all this liquidity. So I would like to see this region ideally support price. We have this breaker over here, and we also have this buy-side imbalance. And I'll explain the reasoning why I think that we may want to slip lower, at least initially, is because of what I can see between the euro dollar and the dollar index. The first thing to note is how we've swept the buy-side liquidity above this swing high, but we haven't closed above it, whereas on the euro, we've actually closed back below the equivalent minor sell-side liquidity pool. And we've dropped into the 25 DRT, so we've touched into an extreme discount relative to the dealing range, whereas the dollar index is failing to get into the extreme premium of this dealing range. So it could be showing weakness at the minute. We have this inverse fair value gap, again, that sits at that 75 DRT level, and the equivalent inverse fair value gap at the 25 DRT level on euro. Now again, price hasn't closed back below this level, and we repel this, closing back above this inverse fair value gap on the euro, and obviously closing below this inverse fair value gap on the dollar. Last week I did point out that we were likely to travel higher, closing in this gap, and then continuing lower. Back below the sell side liquidity pool, below the swing low. We did in fact see that. There's a really nice reaction there of the 75 DRT level. Bodies closing below that. We did wick higher back into the premium end of this inverse fair value gap, but we have this high, low, and this higher high over here, making this down close candle our breaker. This breaker overlaps with this sell side imbalance, which also sits around that 75 DRT. So we had a number of confluences there which would push price lower, and you can see how towards the end of the week we declined. If we compare the euro with the British pound, you can see the pound over here is really failing to get any lower. Notice how we have this measuring gap here at the 50% DRT level, and look at all the support that we found here. Look at the body supporting price.
Must be a terminus.
And then we've run away from that level.
You watched Dan now? I have not. I've seen like I have seen a few of his, I have seen some of his videos though. Way back when. Oh my gosh. Look where we touch perfectly. Wow.
We have this buy side imbalance, and again I said I'd rather not see price come into this and stay firm up here. We do have this inverse fair value gap, again at that upper quadrant of the dealing range. So if we are to travel lower, I'd like to find support over here for the pound. We are also inside of these two consecutive up close candles as our bullish breaker, and the mean threshold, we've tapped that nicely over here on Friday. I'd like to see more symmetry in the market, if I'm being honest at the minute, which is why I don't really want to call longer term price action. Really, when you're trading this, you want to trade the lower time frames, plot your DRT levels, and then look for extreme premium, extreme discount, and look for the liquidity pools and the inefficiencies within those dealing ranges. I'd like to see more symmetry in the market. If I'm being honest at the minute, which is why I don't really want to call longer term price action. Really, when you're trading this, you want to trade the lower time frames, plot your DRT levels, and then look for extreme premium, extreme discount, and look for the liquidity pools and the inefficiencies within those dealing ranges. Ideally, 4 4-hour and 1-hour liquidity pools is where you want to target. Because we could stay inside of this consolidation at the minute. We don't know, right? We do have the sell side liquidity below these lows down here, and we've already ran the buy side liquidity up here. So if we get back below the inverse fair value gap, then I'd anticipate this to act as resistance, and this down close candle inside of that fair value. We've already ran the buy side liquidity up here, so if we get back below the inverse fair value gap, then I'd anticipate this to act as resistance, and this down close candle inside of that fair value gap would become a distribution block, sending price lower back below these swing lows. So that'd be something I'd be looking for if we are to break down. But again, I'm going to see what the dollar wants to do. So there's a whole lot of things that you have to weigh up, right? And this is why Forex is quite difficult at the minute. I mean, we had really nice price action over here, but this is very difficult to trade. Choppy up and down price action. The reason why we're seeing the British pound show strength versus the euro at the minute, as you can see, we've already run the major buy side and we're consolidating around the extreme premium, where the euros dropped lower and we've touched into an extreme discount, is because of what we can see on the euro pound, right? So the pair euro pound, with euro being the front pair, as this drops lower, this is suggesting that the euro is weaker than the British pound, and that's signified by this drop lower. At the moment, with the market conditions, don't overstay your welcome. So when you have a trade on, don't look for home runs, right? You want to look for low-hanging fruit objectives. If you're up 2-1, 3-1, close your trade, right? This isn't the current climate to hold on to the trades and try to squeeze out as much as you can, right? Be sensible. I know you get excited when you're in profit and you feel you want to milk it as much as you can, right? We've all been there, but these aren't the conditions to do that in, right? Anyway, moving on to the euro dollar. So this is last week's price action on the hourly time frame. Now I'm going to quickly go through what we have here. We have the new week opening gap on Sunday, and this is delineated with this blue box. We obviously have the days of the week here delineated with these vertical dotted lines. We've got the 75 DRT level.
What day is this? 14th? Oh, I got a whole different chart than
The
him.
50 DRT level and the 25 DRT level from the higher time frame. We have this daily inverse fair value gap and the minor sell side liquidity pool that we were reaching for last week. This dotted line here is CPI, and you can clearly see how that was the manipulation for the week on Wednesday. So let's run through what actually transpired. On Monday, you could see that we had Monday's high ran here on Tuesday, and we had Monday's low ran here on Tuesday, and we ran that minor sell side liquidity pool to the left, leaving this down close candle. Yes, the consecutive down close candles, but this smaller candle is inside the range of this larger down close candle. This down close candle sits at that minor sell side liquidity low, and obviously below the lows on Monday. So you can see how we were consolidating around the premium high of the order block and the 50% DRT level. On Wednesday, price runs higher after CPI, digging into this sell side imbalance left on Friday. If we grade this range, you can see that price didn't want to close above the first quadrant of this sell side imbalance. I have a separate teaching about this on the YouTube channel if you want to go and check that out. The clue here is that we didn't want to close back above the lower quadrant, so this suggests weakness. We couldn't even get to the consequent encroachment of this sell side imbalance, and then price displaces lower over here back through that 75 DRT level. And then look at the price action over here around the 75 DRT level. We go into this consolidation. But if you look closely, what else can you see at this 75 DRT level? Well, if you look left, you can see that we have this small gap that also overlaps with that 75 DRT level. And look at price being held here like a brick wall. This is also a balanced price range. We have sell side delivery, so we've repriced lower. Then we re-delivered back through that range, and then we rebalance through this range. So this is a very strong level of resistance. And just look at the bodies over here. This is telling you the story. This is an algorithmic signature for smart money. It's giving them a look at the we've done. Look, see what else can you see at this 75 DRT level? Well, if you look left, you can see that we have this small gap that also overlaps with that 75 DRT level. And look at price being held here like a brick wall. This is also a balanced price range. We have sell side delivery, so we've repriced lower. Then we re-delivered back through that range, and then we rebalanced through this range. So this is a very...
So, sell side. Redeliver buy side. And then once we leave it again, we rebalance.
strong level of resistance. And just look at the bodies over here. This is telling you the story. This is an algorithmic signature for smart money. It's giving them all the time in the world to get into it, and then one final time over here when time aligns, right? But I'll leave that one for your studies. Price reacts off that balanced price range and then drops lower, closing back below this swing low, leaving this gap, which is going to become what?
Grind early, yeah.
But I'll get into this in a second.
I got some stuff to do later today.
We close back below the 50% DRT level, and what does price do? Goes into a consolidation, again at that 50% DRT level, just like we had here on the left. Let me zoom in here on Thursday and Friday's price action, and I want to bring your attention to this swing high down to this swing low. So this is going to be our dealing range. Notice how the 50% DRT level, or the equilibrium, overlaps with the 50% DRT level from the higher time frame. Note where that breakaway gap formed, at the 25 DRT level. And we have a measuring gap at the 50% DRT level. And again, look at price failing to close above that 50% DRT level and back into this sell side imbalance. We have institutional order flow entry drill here that goes above this high, and just dips into the sell side imbalance before repricing lower. Notice what we see at the 75 DRT level. We have this terminus gap. Currently, price is consolidating inside of this area. I like how we have these three consecutive down close candles as a potential order block, and we're finding support currently above it. We have equal highs over here, which sits above equilibrium of the dealing range high to the dealing range low. And then if the dollar really does want to drop, then we have all the buy side liquidity above these relative equal highs and these equal bodies up here, again with this sell side imbalance to the left. But this for me would be a short term draw on liquidity. I am also noticing this small buy side imbalance that sits inside of the three down close candles open.
Ain't no way. Ain't no way. Oh, we don't really form a gap here. Maybe on the 4 hour. We don't have a 10-minute gap. No 10-minute gap here. This would probably be a 10-minute gap. Oh, notice what he's saying about turtle soup though. High probability turtle soup is taking a previous dealing range low. Bam.
Range high to the dealing range low. And then if the dollar really does want to drop, then we have all the buy side liquidity above these relative equal highs and these equal bodies up here, again with this sell side imbalance to the left. But this for me would be a short term draw on liquidity. I am also noticing this small buy side imbalance that sits inside of the 3 down close candles over here. We may want to dip into this and then run higher. I do like how we've also ran above this swing high. So now we have a low, high, lower low, with this up close candle here that will act as a potential bullish breaker. So there's a few levels that overlap here as confluence from the higher time frame down to the lower time frame, and we've already dipped into the 25 DRT level over here. Obviously, if this gives up the ghost, as ICT would say, and it drops lower, then I'm going to sit on my hands and wait for more information. So it'll be interesting to see what transpires this week. Of course, next week we'll review, again, price action, and I'll give you a little bit more study points and observations that we have seen throughout the week. So I hope you guys have found this one insightful. If you found this useful, then please drop me a comment below. I always value your feedback, and hopefully I will catch you again in next week's lecture. Take care, guys.
Yeah, that was pretty nice. Look, we have the measuring gap, or no, the terminus. The wait, this is the terminus gap. No, is this? Well, this is the breakaway gap. Well, maybe a breakaway gap on the right side. 25% gap. Come right back to reprice up, head equilibrium right there. Boom. Right there, overlapping imbalance too. Then we consolidate, come up, rejection block. This imbalance there, and we lower. Generate a low right here, come all the way back up. Failure swing. Lower, soup this low here. Doing range low, displacement. Come back, reuse that, equilibrium, come back down, fair value gap, then we explode. Yo, what's good, AOD? Measuring gap, and then this is the 25% is the breakaway gap. Low-key, like, not a lot of notes from that lecture, just more price action related. You should learn CRT. Should I? Candle range theory. Pretty much if we close above. I think I've seen a little bit of. I haven't actually. I haven't looked into it at all. I don't like to trade turtle soups. I don't really need to trade turtle soups. Plus, I can't stand that dude Sham on Twitter. Cannot stand that dude. It's a Dewey range theory. Equilibrium 25%, 75% of the Dewey range. That's where you're likely going to see market maker model signatures. Like 75%, you're likely going to see your silver bullet. You're likely not going to see a stop hunt. 50%, you're likely going to see a consolidation. How do you spell symmetry? No way. That's not how you spell it. You're watching a fees recently. His trades I relate with a lot. They make sense. They don't. Yeah, I was actually in a fees' Discord. I was in his Discord for a minute, but I was in it for like a month maybe, and then I decided to leave because I decided just to watch ICT. You know, because that's where everyone learns. They learn from ICT and then they make their own model. But yeah,
All right, guys, welcome back. I hope you're all well. So just a
I like Hafiz. He's good. He's a good guy. I'll be right back.
couple of announcements before we begin. Next week will be the last lecture to conclude this YouTube mentorship. My plan was to continue it till the end of July, but I've decided to cut it a little bit short for a couple of reasons. Number one, I have to start preparing really for the bootcamp in August. And with all the feedback that I've received during this mentorship, it's clear that there's a whole lot of foundational stuff that people really need. So in July, I'm going to make another free short course on YouTube, which will maybe be 4 or 5 lectures, and it will cover the basics to ICT and dealing range theory. And this will also lead really, really nicely into the bootcamp. I'll explain a little bit more about it in next week's lecture, and when we expect the enrollment process to commence. Now, I know that there are going to be people who can't afford to join the bootcamp, but there is a whole lot of free stuff that I've got planned for this YouTube channel over the next year. Obviously, during the bootcamp, it's going to be quite hectic and quite intense for me because this is the most ambitious project that I'm doing so far. So I'm not going to be on YouTube or social media during those 7 or 8 weeks. But after I'm done, then I do have a whole lot of content coming for this channel. I feel like as far as dealing range theory, I've laid down the foundations and achieved what I've wanted to achieve so far throughout this mentorship. The feedback has been unreal, and I'm super, super grateful for everybody who's reached out to me, and I'm just blessed to be in this position that I can actually pass on knowledge and teach people. Now, I'm going to spare the monologue because I'm going to probably be talking quite a lot in next week's lecture, and I do have quite a lot of slides to get through today, and I'm going to show some intraday price action on the euro. So let's get into these charts, and let's break down what happened over last week. So last week I mentioned that we were likely to see a little bit of weakness on the dollar, at least in the earlier part of the week. But I still want to see price draw towards these relative equal highs up here. And you can see how Monday, Tuesday, Wednesday, we did in fact drop lower. And then we ran through the 25 DRT level and popped back above that minor buy side liquidity pool. This was a really shallow sweep. So again, a pool of liquidity rests above these relative equal highs, and we ended up tapping into that on Friday. We have this accumulation block that overlaps with that breakaway gap that sits at that 25 DRT level. The 25 DRT and the 75 DRT are interchangeable because at the 25 we're going to form the breakaway gap, and the 75 we're generally going to form the terminus gap. If you cannot see 25 DRT level and popped back above that minor buy side liquidity pool. This was a really shallow sweep. So again, a pool of liquidity rests above these relative equal highs, and we ended up tapping into that on Friday. We have this accumulation block that overlaps with that breakaway gap that sits at that 25 DRT level. The 25 DRT and the 75 DRT are interchangeable because at the 25 we're going to form the breakaway gap, and the 75 we're generally going to form the terminus. If you cannot see it on the time frame that you're looking at, then go into a lower time frame and you're likely to find the gap somewhere on a lower time frame. And if you can't find it, then you want to look at the correlated pair, right? And the cleaner price action that the levels align better, that has a cleaner structure, ideally that's the market that you want to trade. Right? So I flip between euro and the pound based on how clean price action looks to me. And obviously I'm looking at euro pound, the pair, to give me more insight into which market I want to be in if one's stronger than the other, right? Anyway, that was a question I had asked. I hope that clears that up. Let's zoom in here on, again, the daily time frame, and let's look at what's transpired and where the market is likely to go. Now, again, I mentioned how we'd already cleared these lows down here on the futures contract. I do like how we've completely rebalanced this buy side imbalance, tapped the order block, and we've really ran higher back above the minor buy side liquidity pool that we outlined a couple of weeks back. If we grade this entire range from the high down to the low, we can see that we dropped into the equilibrium level last week. This level overlapped with this sell side imbalance, which I'm looking at as an inverse fair value gap. But more specifically, I'm looking at this as the measuring gap since it sits at 50% of that dealing range. I'm also looking at these consecutive down close candles that close below this swing low, running
I'm 19. Yeah, for dollar, this is like the last line of defense. I think we don't somehow whipsaw here, and I don't think this doesn't look bullish at all. I think we're heading to these lows. If you look at the weekly chart, you got a nice order block with the fair value gap right there. I think that's where we want to go. We've now created a swing high as well on the weekly chart.
the liquidity below these lows. So this is our order block. And I'm looking at the opening price of the order block, and you can see how on Tuesday last week we dip into the opening price. Generally, I want to see a reaction within 2 candles. We don't get it here in the first candle, but in the second candle we have this displacement higher, so this confirms that order flow is bullish. We also have this down close candle that forms after dipping into the previous or the original order block. We can grade the body of this candle. You can see how that 25% level overlaps with the opening price of the parent order block. This down close candle is our propulsion block, and I look for sensitivity in the upper quadrant. With a good propulsion block, generally you won't see it travel further than the upper quadrant if we are in obviously a bullish order block. And again, price really reacts nicely from there, running back above these relative equal highs and into the 75 DRT level. Now I have the 75 DRT up here because I'm looking for a run above the buy side liquidity. So we're currently inside of a buy program. Technically speaking, if we're in a sell program, then we plot from high to low. If we're in a buy program, we plot from low to high, right? We also had this up close candle. We have this low, high, lower low. So this up close candle is our bullish breaker, and the premium high overlaps with the opening price of the bullish order block. Ideally, I want to see price stay firm. We do have this buy side imbalance. So again, Monday, Tuesday, Wednesday, we can anticipate a run lower. I'd rather see a portion of it left open, although my line in the sand would be the mean threshold of this down close candle. On the weekly time frame, that also overlaps with a weekly fair value gap. A close below that, and then we're going back down here. But for the time being, I'd rather it find support up here around this 25 DRT level, and then so my line in the sand would be the mean threshold of this down close candle.
Yeah, we did
On the
violate
weekly
that.
time frame, that also overlaps with a weekly fair value gap. A close below.
We have a weekly fair value gap there. Oh, we do. I didn't even see that. We didn't respect that at all. Respect that at all. Daily propulsion mean threshold invalidated. Yeah, we're definitely heading to discount, extreme discount. I'm thinking these lows here. There's no way.
Below that, and then we're going back down here. But for the time being, I'd rather it find support up here around this 25 DRT level, and then resume going higher for the equal highs up here.
Yeah, that's
On
what
the
it
4-hour
did.
time frame. So again, last week I said that I wanted to see it find support in the extreme premium of this dealing range, and I highlighted these 2 up close candles as a bullish breaker. So you can see how we found support. Again, this dotted line is at 50% DRT level, and the later part of the week we really pushed higher. Again, I explained in last week's lecture that Friday was a lot of high impact news, so we were likely to see the most explosive move at the later part of the week, and that's exactly what ended up panning out. It is worth mentioning that we do have a higher high posted here on the dollar, but we failed to post a lower low on the euro. So I'll get into that in a second, but that could indicate some short-term bullishness earlier on in the week for the euro, which again would be expected since we've cleared buy side up here. So I would anticipate some level of retracement earlier on in the week. There's further reasoning for that, but I'll explain that when we get into the euro chart. Speaking of euro, this is the euro dollar on the weekly time frame. We're obviously over here and let's have a look at what's already transpired, right? So we've obviously ran buy side liquidity here, and then we dipped above it one more time over here, completely rebalancing this sell side imbalance. So we've had buy side delivery, sell side delivery, and then we traveled back through that range, but we failed to close above the equilibrium 50% DRT level. Price consolidated around this buy side imbalance. Now, we spent a lot of time in this area. For me, this is sufficiently balanced, and you can see how we work the premium end over here, ran the buy side liquidity above these relative equal highs, touched the premium end of this buy side imbalance, closed back below it, and then touched the discount end over here and ran away. Zooming in onto the daily time frame, you can see here how we're currently inside of this inverse fair value gap and this down close candle. We touched the discount end of the weekly fair value gap here and ran into the opening price of this up close candle, which was formed after running into these consecutive up close candles. So this was our initial bearish order block. We ran into it here, touched the premium end of that weekly fair value gap, filled in this volume imbalance, mitigated at this breaker, this high, low, higher high, this last down close candle, dropped and closed below the weekly fair value gap, creating this propulsion block. And look at the bodies here, they really respect the opening price of this propulsion block. Again, if
Yeah, but we did find support here. I want to see this be a breakaway. I want us to find support here. Ideally, I don't even want to see a trade back here. I just want to see expansion.
we grade the body of the propulsion block, you can see how that 25% level overlaps with the discount end of that fair value gap. So we have a nice confluence over here. And to the left, we have these two consecutive down close candles, which acts as our distribution block. Again, overlapping with the discount low of that weekly fair value gap. We do have this small sell side imbalance. So earlier on in the week, I want to see if we want to reach up into this area. But again, here you can see how we posted this higher low, whereas the dollar, we posted the higher high. And we're already in a very deep discount relative to the dealing range. Moving on to the hourly time frame. So you can see where we have the dealing range high up here and the dealing range low down here. We have equilibrium, which is this green dotted line. I hope you can see that clearly. Now, I'm going to zoom in, but I wanted to just show you the entire dealing range so you could see the DRT levels and the fact that we're sitting inside of a discount relative to the entire dealing range. So zooming in here, we have the days of the week plotted and delineated with these vertical dotted lines. So last week I mentioned these 3 consecutive down close candles and the fair value gap that rested inside of that order block, and this up close candle as a breaker. From 12 AM on Monday, you can see how we dipped into this buy side imbalance and the reaction that we had here from the discount end and then the premium end, and then price really ran away. I did actually trade this. I didn't get in at the very low. In hindsight, I wish I placed a limit order, but I did get in over here during the New York session. We dropped lower into the terminus gap that overlapped with this 75 DRT level. In this case, it's a terminus gap because we were in a sell program, and then we ran back above it. You can also see how this was influential on the right side of the market maker model, right? If we take Monday's range from the high to the low, equilibrium overlaps perfectly with the 75.
This is Euro, right? Yeah. Equilibrium. I've Monday's range. Nah, he's
5 DRT and the consequent encroachment of the terminus gap. We dropped just below equilibrium into a discount, into these 2 down close candles. The bodies over here telling us that we don't want to close back below the 75 DRT or the terminus gap. And then we have this displacement higher, closing back above the upper quadrant 75 DRT level. And if you look left, what do we have here? This is our terminus gap. You can see how that was influential again here on Wednesday. Price then runs.
Wow, yeah. Is that 75%? Ooh. Bang. Bang. Maybe. So and we have this breakaway gap. Curious to see this dealing range right here. So terminus gap, 50%. Wait. Maybe breakaway. Then we have a breakaway. We don't really have a measuring gap. We don't on a lower time frame. Let's check the 15-minute. No breakaway. Maybe here. Premium. Or discount, premium. Premium. Discount, discount, equilibrium. Back to discount.
Displacement higher, closing back above the
Let's go Tupac.
upper quadrant 75 DRT level. And if you look left, what do we have here? This is our terminus gap. You can see how that was influential again here on Wednesday. Price then runs into the equilibrium level above the buy side liquidity to the left and into this sell side imbalance, which again overlaps with that equilibrium level and is our measuring gap. This measuring gap also overlapped with the discount low.
I'm from Colorado.
Weekly fair value gap. We then drop lower, back into a discount, back into this buy side imbalance.
Hey, appreciate it.
High, lower, low. We have a breaker.
You too, bro. You too, Omar.
Then we had the terminus gap. Accumulation, manipulation, London, and then distribution back above the buy side liquidity above here and above the bodies of these candles, digging up into this wick. As this was occurring on Wednesday, you can see how we ran above Tuesday's high, creating this higher high, whereas on the euro, we failed to run above Tuesday's high, creating a lower high. So this is a valid SMT divergence at a key level, and you can see price really roll over. It's very weak over here, and we drop and close back below this swing low. Why is this a market structure shift? I get this question a lot. What's the difference between a break and a shift? We were already in a sell program. So we had a short-term shift going higher, and then we resumed with the sell program. So this is just another short-term shift in structure. After this market structure shift, what do you notice? We have this sell-side imbalance. And if we take the high to the low, you can see where the equilibrium level is, and just look at the bodies over here. So this is a huge algorithmic footprint. This is an algorithmic signature. And this tells smart money that are coming in here and they're executing short orders here, 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 one more time over here. And then it gives up the ghost, as ICT would say, and closes back below all of this sell side liquidity, back below the 75 DRT level and this terminus gap. So this is a very significant event. We have a short-term high over here, and then we rally back above this short-term high, rebalancing the remainder of this sell side imbalance, and inside of a premium relative to this high and this low. We swept buy side liquidity inside of a premium and rebalance at the same time. So again, that analogy that I used, two birds with one stone, you can see this manipulation here on Friday, and then we really tank, sweeping the low that was created on Monday. Now retail are going to look at this as a bear flag. Right? Now I'm anticipating a run higher. How high we can go, I'll have to assess what happens on Monday and Tuesday. Generally, I don't like to trade Monday. I usually let Monday's price action pass, especially if I can make a case of both sides of the market. But I'm anticipating a run higher into this sell side imbalance and maybe back into the terminus gap. We do have the daily fair value gap higher, so we could reach in.
Check Bitcoin. I did in a market review. I had a market review that I did.
Into that, but I would rather see that left open. I'd like to see price upset the retail sentiment and then make a run lower for the lows down here. So I want to see how price really moves Monday and see what's going on into Tuesday, and obviously cross-examine that with what the dollar index is doing, right? In terms of deviation.
But overall, I don't know. I'm not touching Bitcoin at all. We're really looking for it.
Deviations, if we take this swing high and this swing low, projecting deviations, 1.5 deviations that come really nicely into that measuring gap. We didn't quite completely fill it, which makes me wonder if we do want to knock back up above these relative equal highs and get back into a premium relative to the dealing range. But we were in close proximity and the high of the week came in.
Yeah, but ICT himself says he doesn't like to trade gold.
Here on Tuesday. Let's look at Tuesday's price action on a 5-minute time frame so we can get into a little bit more detail. So here we are on the 5-minute time frame. We have this vertical line here which delineates 12 AM New York Eastern Standard.
Oh, I never had that at the low.
Time, and that is the start of the day. We have our measuring gap here in orange. This green dotted line is our 50 DRT level. We have the purple line here, which is our discount end of the weekly fair value gap, the daily propulsion block with this red line, and our terminus gap down here, which overlaps with the 25 DRT level. Now, if we split this into sessions, we have between 4 and 8 our central bank dealers range. We have between 8 and 12 our Asian range. 1 o'clock starts the London Open. From 1 till 5 we have the London session, and then from 7 till 10 we have New York, and then London close from 10 till 12. So let's take a look at what actually transpired here. We swept the central bank dealers range low during the Asian range, and then we continued trending lower. So the whole of the Asian range was just trending lower, right? During London Open, we dropped back below Asia's low, creating this dealing range high and our dealing range low down here. price reverses and starts a buy program going higher. We obviously drop below the Asian low and we create this down close candle, which becomes our bullish order block. You see how we tap into it here. This is actually an entry technique that I quite often use, is if an old low overlaps with an order block. This is quite a strong entry technique and another model that I like to use. Price then displaces higher, running through the terminus gap. Again, you can see how if we extend that out, it's influential going forward. We have these consecutive up close candles that acts as an accumulation block. We have this low, high, lower, low. So we have our breaker in here as well. We have this down close candle, opening price, extend that across. So again, a lot of confluence in this area to push price higher. And this sends us into our breakaway gap, which sits at that 25 DRT. You can see how we nailed that really nicely over here. Again, if we look right, the influence that this level has in supporting price up here. After completely rebalancing this breakaway gap and rejecting from that 25 DRT level, we reverse and run lower, sweeping the initial low created in London. We then have the London lunch between 5 a.m. and the beginning of the New York session at 7 a.m. So it's a 2-hour lunch. This is dead time. I tend not to refer to any price action inside of this. This is where we're likely to have time distortion and price action going back and forward. There are...
Yeah, I mean, if ICT says he doesn't like to trade gold, then I don't know. I wouldn't really look to use it in gold.
conditions where we can trend, and there are conditions where I may refer to it, but it's beyond the scope of this teaching anyway. But the majority of the time I'm ignoring the price action between the sessions, right? At 7 a.m. at the beginning of New York, we have our New York opening price. And you can see how we drop below the opening price, sweeping London's low, accumulating inside of the terminus gap to the left, and then price really displaces higher. Institutional order flow entry drill here runs back through the opening price of these two consecutive down close candles. So the wick to the opening price is going to be sensitive because these two down close candles become a propulsion block. If we extend that across, you can see how the price really displaces higher. Institutional order flow entry drill here runs back through the opening price of these two consecutive down close candles. So the wick to the opening price is going to be sensitive because these two down close candles become a propulsion block. If we
What order block are we coming back into?
extend that across, you can see how the price action here is accumulating inside of this wick. And then we expand higher.
Why is he saying this is a propulsion?
Retrace back into this buy side imbalance, and then run into the 50 DRT equilibrium level of the dealing range. Now, on the previous slide with the hourly time frame, Friday's price action gave us the standard deviations for the premium high of the measuring gap as a potential target. I'm also looking at the flout range, which encapsulates both the Asian range and the central bank dealers range. There are rules when to use flout, and I'll cover all of this in the bootcamp with the foundational stuff, but if we project one standard deviation, we get a level of 107,612. If we take the London range, 1.5 standard deviations gives us 107,610, and if we measure the range from the low of New York to the high of London, an equal measured move higher of 1 standard deviations gives us a level of 1.07606. The actual high comes in here at 107,615. So 107,610 as a lower objective has a lot of confluence in this area. And you can see that the high of the day and the numbers were filled during London close. I know for the neophyte it looks like I'm pulling levels out my arse, right? But again, this is the reason why I created the Advanced Market Maker model course. The majority of this is explained in there, and I'm not just randomly putting fibs all over the place. There is a method to it, and there is a timing sequence that I use. I've been studying the timing in the market for years and years and years, and I have my own timing model. It's something that I'm not going to teach. It's taken me a long time to get it right. The purpose of this mentorship was to put the stuff that I taught conceptually in that course and how it applies to real-time charts and how we can predict where the market is likely to go and become very, very, very precise. Precision doesn't make you money. And I'm never catching the highs and the lows, right? I'm looking for the meat of the move because the purpose is to make money. But for all the people who claim that ICT doesn't work and that there is no algorithm, there is nobody doing this level of technical science and this level of accuracy and precision outside of ICT's work. And I'm proving how that knowledge is transferable if you dedicate time and you take this seriously. Next week will be the final lecture to conclude this mentorship series, and I'm going to talk about what it takes to really make money using these concepts, and hopefully give you a little bit of motivation that you're on the correct path. But for now, I think I'm going to call it a day because I still have a lot to edit, and I will hopefully catch you guys again in next week's lecture. Take care, guys.
Hey,
All right, guys.
we're on the final one. Do you fully understand propulsion blocks? Yeah, mainly. I don't know why he was calling that one a propulsion block though. It's, I mean, I guess maybe a higher timer order block, but works better in London session. Yeah, London's. I mean, New York session for forex is mainly going to be a retracement and a continuation of whatever London did. London did. I don't have a lot of notes for this, honestly. last
Ho-
last last one. Oh, okay. And then I need to. New York Open is 7 a.m. 7 a.m. in Germany. That price can be used like other opening prices with discount premium.
Hope you're all well. So this is the last episode of
The
this
last
mentorship.
episode.
Ideally, I would have liked to have.
I'm
seen
sorry.
people
I
live.
feel bad. I shouldn't be doing that. I don't know. It's fun to do. Episode 9. Final thoughts. Can you talk about your strategy? I trade ICT concepts. Yeah, I trade ICT concepts. But pretty much what I'm looking for is I trade ES and NQ. And I'm still trying to. That's why I've been backtesting a lot. I've been trying to figure out what type of strategy that, or what type of model that I want. But basically, I'm pretty much looking for 930 no opening, and I'm looking for manipulation around that. Unless if we have 830 news. So right here we had 830 news, so therefore 830 manipulated price, and then we supported that new day opening gap. And I'm pretty much just looking for what price did at 830 or 930, and I'm trying to see where we likely going to expand towards. Yeah, that's kind of like my strategy. And I've been back to seeing new day opening gaps and new week opening gaps a lot recently, if you've been watching. And I found that these gaps are like the hidden PD array, honestly. Wait, we hit 20,000. We hit 20K. Did we just hit that this year or this week? Yeah, we just hit 20K this week. Wow. What do you think it's gonna be like trading Nasdaq in 2060 when it's at like 50K? Most likely.
Be run during the course of this mentorship. But as you well know, you can't enforce your will on the markets, right? Now, during this mentorship, I've covered a lot, and I've covered some of the basics of dealing range theory. The feedback has been absolutely phenomenal, and some of you have really, really gone back through your charts and really back-tested this. And some of you have created a whole model just around dealing range theory, and dealing range theory encapsulates all of ICT. But the main components are where the gaps form inside of a dealing range. There are other things within dealing range theory, which I will cover at some point. But the main thing for this series was where high probability gaps form and how we can use the different DRT levels as structural support and resistance in the marketplace. Price around dealing range theory, and dealing range theory encapsulates all of ICT. But the main components are where the gaps form inside of a dealing range. There are other things within dealing range theory which I will cover at some point, but the main thing for this series was where high probability gaps form and how we can use the different DRT levels as structural support and resistance in the marketplace. Price moves from premium to discount and from discount to premium. From extreme premium
From discount to premium.
to extreme discount and from extreme discount to extreme premium. Those of you who have taken the information and really gone back and backtested really understand what I just said then, and how that in itself is a game changer. I have proven that with dealing range theory combined with ICT concepts, we can determine market direction. I've used logic in conjunction with narrative to show you why the market moves the way the market moves. Now, of course, all of this has already been explained by ICT. He gave us the foundation and the groundwork for us to be able to interpret the market like this. There is a structured approach to why I think price will move to a certain level. And the framework for all of this is through dealing range theory and specific DRT levels. I think it's clear to see that DRT unlocks the rest of ICT's work. There are a few more key points that I want to point out today towards the end of the lecture that I think are really great gems and will hopefully help you in your trading, right? Now, to those of you who have made it this far, like, I genuinely congratulate you. Just like all of ICT's work, the very first few lectures have a lot of views, and by the end of his series, the views drop off significantly, 70, 80, 90% in some cases, and I've seen the same thing here with this mentorship, which is why the juicy stuff I wanted to really leave towards the later lectures. Those of you who have got this far, you are real students of mine, and I absolutely appreciate you guys. It's an honor to be able to pass on knowledge and have people all over the world who acknowledge the work
Shout out
and the
Ali
efforts
Khan.
that you've put into doing this and into this craft. It's been a very, very long journey to get to the stage that I'm at, but I wanted to leave you with a few thoughts.
I think he went to the consequential of the. Wait, we hit CE of that puppy? Yeah, you're right. Perfect, beautiful. Maybe on the 5 minutes. Oh yeah, baby. What does that look like on the 15 second? Let me pull up Tradeovate real quick. The only problem with Tradeovate is I can't really use a fib on Tradeovate. It's cool. I don't want to try to log in my account.
Because if you have made it this far, then you have everything that it takes in order to become successful at this. The majority of people haven't got the attention span to sit and listen through all these lectures and get this far, right? Which is why the majority of people who studied under ICT didn't make money. And that's why a lot of people called ICT a scammer. And he just wasn't the best at teaching, if I'm going to be brutally honest. And I can say that because I paid him for his work. I paid him for his time. And that may offend some of you. That may offend ICT. But ultimately, I'm my own man. And I'm able to critically think. And that's something that a lot of people lack these days, is to be able to think for themselves. Most people give up at the first hurdle. So
Yeah, that's true. Nowadays, people.
if you've managed to get this far, then you're able to be consistent. You're able to be disciplined. And that's the holy grail. It's about being able to consistently pursue something, regardless of the time it's going. To take. I don't.
What's your thoughts on Bitcoin? I couldn't really even tell you, bro. I think I wouldn't. I don't like Bitcoin. I don't trust Bitcoin. I don't have anything. I don't. I don't like Bitcoin at all. I don't. I never have. I never really looked into Bitcoin. But I think we have just liquidated sell side liquidity. If we do get displacement higher, I think that we could get a run on all time highs. But I don't know. I don't know, man.
Flex. I know that I'd have a whole lot more followers if I did, but I don't care about the clout. It's not why I do it. I genuinely want to pass on knowledge to you guys, and if you can take this information and change your lives just like I have, then I'm grateful for that. I never in a million years thought that I would be where I am today, but what I knew was there is something here that if I am consistent enough and I am able to study this long enough, I might be able to get it. Now, I was a terrible trader for a long time. I was excellent at reading price. So like I said before, they're two different skill sets, but the better I got at reading price, the better I got at trading. There's a direct correlation. Yes, there's psychology and risk management and learning yourself and knowing what model fits you. There's all that kind of stuff you have to work out. But the key is being consistent enough to know what works for you, right? Now, sure, you can find a very, very easy basic strategy which is going to give you a buy or sell signal. You don't know what you're doing with it. You don't know what price is doing. And you can play a numbers game over a period of time. In my opinion, you're gambling and you're just a money manager, right? You don't understand why price is doing what price is going to do. And that didn't sit right with me. I could never trade knowing that I do not know what price is going to do and why it's going to do it. When I first started, I was using indicators and they were bullshit versus what I can do now and how I can predict where price is going to go. The point of why I'm trying to say what I'm trying to say is because only you're going to understand this. And I'm speaking directly to you, the person who's listening, because you've got everything that it takes in order to become successful in this industry because you're willing to learn. Right? This shit is hard, right? It's not easy, but you're willing to put yourself through this in order to acquire this skill set, where most people out there just want it spoon-fed to them. And despite me saying that it's hard, despite me saying that it's going to take you a long time, despite me not flexing my jewelry and my cars that I own, you're still here willing to learn from me. That says so much about you, and I genuinely congratulate you, which is why I'm super excited for you in your future. I say this because I've been through the exact same journey. I didn't care how long it was going to take. I knew that there was something here, something tangible. There was evidence here that if I learned this skill set, I could do something with it. I did way, way more than I ever thought that I would do. That's the truth. If I genuinely showed you my lifestyle right now, you would understand why I'm so passionate about this. Because this is the truth. It's the truth of the markets. It's the truth of how price moves. And you're not wasting your time watching this because I know you believe that too. I know you've seen enough evidence by me showing you, by ICT showing you, by many, many other students all over the world showing you what's possible, that you're intrigued enough, you understand enough to know that there's something here. And if you can grasp this skill set, you possibly could make this work for yourself. How long that's going to take is different for everybody, but I promise you, consistency is all it takes. I always refer back to this, and I've said this dozens of times, and my students are probably sick of me saying this, but I spent 5 years trying to become a pharmacist to earn a very small wage, stuck inside of a box room for a decade. 5 years of not making a penny. Why are you complaining when you're not getting this in a year or two in an industry where there is no damn ceiling? I put myself...
Wow. This is a sermon right here.
I spent 5 years trying to become a pharmacist to earn a very small wage, stuck inside of a box room for a decade. 5 years of not making a penny. Why are you complaining when you're not getting...
5 years to not make a penny.
this in a year or two in an industry where there is no...
Oh, I'm gonna do after this video. I'm gonna do a mental log, and I'm gonna do this on stream just because if I don't do it on stream, I'm likely gonna forget. Because I got some things going on today. My mental log is
damn ceiling. I put myself through all those years of school, college, and university and tens of thousands of pounds worth of debt. But if I had just sat here and learned it, and this is free, like you're learning this for free. This level of information that universities would charge an absolute fortune, you're learning it here for free on YouTube. Now, that brings me on to the next point. Now, I know there's a massive variation in experience levels when it comes to ICT. And that's the reason why I'm setting up the bootcamp in August. And I've had dozens and dozens and dozens of questions about this. So I'm going to briefly touch on it. But I want to start by saying that, number one, you don't need the bootcamp. There's plenty of information out there for free on YouTube, right? It's just going to take you time to piece it all together. But if you put the legwork in, you can do it. You can find it. Now, your mentor, whoever you're going to learn from, should be able to do this. They should be able to call price in advance, right? If they have any decent understanding of ICT concepts and how the market's booked, they should be able to do what I'm doing. I've been able to do this for years, right? It was just done in a private group. Now that I've done this for free on YouTube, all the trolls have suddenly shut up. I already proven I was able to learn complex and advanced subjects doing a degree in pharmacy. I haven't just watched a few YouTube videos and decided I'm going to go out there and teach. I've been teaching for years now, right? The point I'm saying here is that I spent £40,000 to go through uni to learn a skill that I no longer use. The bootcamp that I'm going to set up in August is going to be 8 weeks. I can take you from being a beginner all the way to developing a full working model that I personally use, and I'm going to charge less than £1,000 to do it. I've just been going over the curriculum with the team over the last couple of days, and it's fantastic. Like, I'm super excited to start because it's taken everything that you really need to know and putting it into an A+ working model. We have coaches, we have psychologists. There's a genuine structured approach. I know that ICT has its core content out there, but in my opinion, it's so badly structured that even though I've been through that content more than a dozen times, in the beginning I still didn't understand it because it's structured so badly, right? How to understand this is you need somebody to guide you through the whole concept and structured correctly. Why price is going to do what price is going to do, and what specifically you are looking for. He gives it you in bits and bobs, and he doesn't specifically tell you, okay, this is exactly what you need to do, right? That's my goal with the bootcamp. So this hasn't been finalized still because we still have a lot of work to do on the back end. We're just extremely busy trying to get everything sorted and before August. We are looking to launch mid to late August. I'll give you more details closer to the time, but just to quickly run over the structure, week 1 is going to be something called cognitive remodeling, where we go into psychology and all the other stuff with our psychologist. So that just gets everybody into the mindset and what to expect, right? Week 2 is going to be building the foundations, where we talk about liquidity, order pairing, algorithm inefficiencies, and all the main components to the algorithm, basically, and how price books. Week 3 is going to be unveiling the market mechanics, where I'm talking about time, dealing ranges, DRT theory, internal range to external range liquidity, external range to internal range inefficiencies, and really how the market books from premium to discount. Week 4 will be called charting the structure, where we're going to talk about advanced market structure, where we go into short-term highs and lows, intermediate-term highs and lows, long-term highs and lows, how they form, SMT divergence, and how we identify high probability SMTs. Week 5, we talk about time and price. This is when I go into the arrays, order blocks, breakers, rejection blocks, and I introduce the flagship model of the bootcamp, which is going to be the power of 3. I'm going to take that, and for the final 3 weeks of the bootcamp, we're going to be doing drills and a full model breakdown from a top-down analysis using the economic calendar with the weekly templates for swing trading, for intraday trading, and for scalping. With the scalping stuff, I'm going to go into macros and how we can pinpoint specific times of the day when we are looking for highs and lows to form. And once we've completed, you will have an absolute solid understanding how the markets move, how the algorithm books, time, price, arrays, and then this will lead you perfectly onto the more advanced teachings, which is the market maker model course, if you choose to go that far. Every weekend on a Sunday, I'll be doing a live Q&A session with the community. We will have a questions board where I will pick questions and I will literally go over the charts and answer all those questions that we're getting. Each week there'll be a theme, so it'll be specific to the theme of that week, right? The teachings will occur through our website, our Discord, live sessions, and we have coaches who will be running their own educational channels within our servers as well. These coaches I've personally mentored myself over the last 2 to 3 years, and they are almost as good as I am. Some of them are probably going to get better than me soon, I'm not going to lie, but the point is, you are in the absolute best place to study ICT concepts. There will be around 3 to 4 lessons depending on which week it's going to be, and they will be released on a weekly basis. Enrollment will start probably early to mid-August. Now, there's going to be a maximum number of students allowed into the program because I don't want to overwork the coaches and everything, because we have from the past just so many questions that come to us. So to keep it manageable, we're only going to have a limited amount of students. And once we hit that number, then no more students are going to be allowed into the program. It will be the best investment of your life, and the return on investment that you can potentially get for the future is insane. So I don't like to brag. I know that sometimes marketing reasons you kind of have to, but I've showcased for 2 months what I'm capable of doing and the knowledge that I actually have on this. So if you are going to learn from somebody other than ICT, then I think I'm the guy for it. I love doing this. I love teaching. I'm incredibly passionate about it. I'm sure you can tell by the way I talk about this that this has become my life's work, and I genuinely want other people to experience what I have experienced through this journey and being able to replace my income and quit my job and live on my own terms, and this has all been possible through this skill set, right? Anyway, that's enough of that waffle. Let's get into the charts here. So we are here obviously on the dollar index, and this is the daily time frame. Now, last week I said that I didn't want to see this fair value gap completely close in, and I wanted to see price make a move higher and draw towards these equal highs up here. As you can see, we didn't completely rebalance this gap. The bodies of the candles over here closing above the equilibrium of this buy-side imbalance. We dropped into this inverse fair value gap from this candle's low to the opening price of this candle. And the reason for that is because we have this volume imbalance, or I'm encapsulating this volume imbalance inside of this inefficiency. You can see the price action. action here around the 25 DRT level, and then we gapped higher. Again, this is a sign saying that price is in a hurry to move in a direction, and then we ran through.
Gap higher.
Price of this candle, and the reason for that is because we have this volume imbalance, or I'm encapsulating this volume imbalance inside of this inefficiency. You can see the price action here around the 25 DRT level, and then we gapped higher. Again, this is a sign saying that price is in a hurry to move in a direction, and then we ran through with a close above the 75 DRT level and back above the premium high of this buy side imbalance. The draw on liquidity remains the same for me, is the relative equal highs up here and the liquidity void that needs rebalancing. We do have this small volume imbalance, which sits inside of this down close candle, which is an order block. The order block became valid when we traveled through the opening price, and with a close above the order block high and the 75 DRT level, this becomes a very high probability order block. I like the volume imbalance in there. Just like a high probability fair value gap sits inside of an order block, we can treat volume imbalances and actual liquidity voids the same way. I also like how it sits at the 25 DRT level of the higher time frame dealing range. Remember, the current dealing range is from this candle's high to this candle's low. We already ran the major sell side, and I explained that in the futures price for the dollar index, and we ran into this down close candle here, the opening price, if we extend that across. So that swept all the sell side liquidity, which means we had our change in state of delivery after we ran the sell side. The next liquidity that the algorithm will seek will then be buy side up here, right? Moving on to the euro dollar. Again, this is a daily time frame. So we stayed below the daily propulsion block, so this up close candle over here. This also overlapped with the 50 DRT level from this swing low to
Notice that. Oh, I mean, I guess equilibrium is the ideal range low. That's great. That's. The bodies originally just respecting that high, and we create an order block, and we displace above. This just looks like we're not holding that, and we didn't create responsiveness 1-2, and then this candle doesn't show anything. I mean, it actually shows a wick here, but then this candle kind of confirms that we don't want to go higher, because like this candle is just like we were 1, 2, 3, 4 candles within that order block. It's probably not a real order block, and then we end up just displacing lower. Let's look at euro. A nice sell side inbound or inverse for value gap. Beautiful.
this swing high, and you can see how the bodies of the candles here failing to close back above the 50 DRT level. You can see how the consequent encroachment of this buy side imbalance perfectly overlaps with that DRT level, because these DRT levels are actual structural support and resistance. In the market. We can see that here we have this 75 DRT level where we have this buy side imbalance. If we extend that across, look at the bodies over here. And again, down here, we have the 25 DRT level where we form this buy side imbalance. We extend that across. You can see the rejections down here. Price is currently consolidating between the 50 DRT and this 25 DRT level. Moving on to the hourly time frame on the euro between the 50 DRT and this 25.
See, I don't have a daily imbalance there. So I don't like Forex.
DRT level. Moving on to the hourly time frame on the euro. Now, if we delineate the days of the week here from Monday to Friday with these vertical black lines, you can see how price has moved over the past week. Now, if you recall to last week's mentorship video, I mentioned that we had this bear flag. Now, retail would be looking at this as a bear flag, and they would anticipate an equal measured move lower, right? So from this high down to this low, this would be the flagpole. They would anticipate a measured move lower and into that sell side liquidity. I said that we were likely to run higher first before we run to attack that sell side liquidity. That's exactly what happened. I was waiting for Monday to get out of the way. I actually traded up here. I got in around here. It was on a lower time frame. It wasn't my perfect entry, but I knew that there was a lot of range to the downside, and I actually took an entry up here, and I got out actually just below these lows down here. I want the low hanging fruit objective. So it was a beautiful trade last week, and that was the best trade of the week. Unfortunately, I didn't manage to screenshot it, otherwise I would have put it up, but whether you believe me or not, that's irrelevant to me, to be honest. But even so, I did say that we were likely to run higher first to upset the retail sentiment. Being honest, I didn't think we were going to get as high as we did. I thought that we'd reach into here, or probably the daily time frame, which is around here, but we did dip higher into that higher time frame fair value gap, so this orange shaded area. Consequent encroachment, look at the bodies there, beautifully respecting the consequent encroachment and digging back up into that daily propulsion block and into that 50 DRT level. As this was...
Look, he's like tweaks out with his mouse. Oh.
happening, if we look to the British pound, you can see how we were running into this small sell side imbalance with this order block. And again, I said I wanted to wait till Tuesday because I wanted Monday out of the way. And this is what I was waiting for. I wanted to see if there was going to be any valid SMT between the euro and the pound or the dollar index, right? So I always look for the SMT before I look for any trade. I got a question asked. I'd say 95% of my trades, they do have some kind of SMT. When we are in the initial consolidation like this, right, I generally want to look for two stages of SMT. We have stage 1 here, and then we have stage 2 here, right? So you can see that we failed to make a higher high here on euro, and we made the higher high here at the same time. Remember, it's smart money time, and you can see obviously how price really sank after this SMT on Tuesday. The dealing range was from this low to this high, so this was a minor dealing range. Your highest probability SMT will occur when one asset travels outside of the dealing range and the other asset does not.
Oh, Shire.
SMT. We have stage 1 here, and then we have stage 2 here, right? So you can see that we failed to make a higher high here on euro, and we made the higher high here at the same time. Remember, it's smart money time, and you can see obviously how price really sank after this SMT on Tuesday. The dealing range was from this low to this high, so this was a minor dealing range. Your highest probability SMT will occur when one asset travels outside of the dealing range and the other asset does not. That is what you call a high probability turtle soup. There are different types of SMT depending on which stage of accumulation distribution we are in and where we are within the DRT range. Moving does not. That is what you call a high probability turtle soup. There are different types of SMT depending on which stage of accumulation distribution we are in and where we are within the DRT range. Moving on, you can see on Tuesday that we dropped lower with this displacement, leaving the sell side imbalance. Price failed to get the consequent encroachment over here, and then on Wednesday we really sell off, running back below the retail bear flag and a very shallow sweep below the initial dealing range, right? So we had the sell side liquidity below that. We tapped into it. Now, currently, we are sat inside of this dealing range, right? So from this high down to this low. At the minute, we have our 25 DRT gap, and you can see how we've had support around this buy side imbalance. We have the
Wait, hold up.
running back below the retail bear flag and a very shallow sweep below the initial dealing range, right? So we had the sell side liquidity below that. We tapped into it. Now, currently,
Yeah, it's like
we are sat inside of this dealing range, right? So from this high down to this low. At the minute, we have our 25 DRT gap, and you can see how we've had support around this buy side imbalance. We have the 50 DRT gap. You can see how we've had support here, beautifully touching that 50 DRT.
Is he gonna call this a terminus?
Level, which is also the consequent encroachment of this sell side imbalance. Also note that we have this down close candle as our breaker inside of that 50 side holding liquidity and a very shallow sweep below the initial dealing range, right? So we had the sell side liquidity below that. We tapped into it. Now, currently, we are sat inside of this dealing range, right? So from this high down to this low. At the minute, we have our 25 DRT gap, and you can see how we've had support around this buy side imbalance. We have the 50 DRT gap. You can see how we've had support here, beautifully touching that 50 DRT level, which is also the consequent encroachment of this sell side imbalance. Also note that we have this down close candle as our breaker inside of that 50 DRT level, which sits inside of that sell side imbalance, right? So this is our measuring gap. If we look at the 75 DRT, so the upper quadrant, we have this buy side imbalance. Again, we have this up close candle inside of that 75 DRT gap, and we have these relative equal highs up here. Now, prices under the level, which sits inside of that sell side imbalance, right? So this is our measuring gap. If we look at the 75 DRT, so the upper quadrant, we have this buy side imbalance. Again, we have this up close candle inside of that 75 DRT gap, and we have these relative equal highs up here.
Look for gaps.
Now, prices already open. This is really late on Sunday going into Monday morning where I'm recording this UK time. So we've actually gapped higher. We've actually ran above this buy side liquidity over here. I was already going to mention this when I made the slides earlier on in the day, but just the way it is, sometimes price moves before I actually get these slides recorded, right? Now, what I am anticipating is I want to see price run lower into here, right? And the same thing that happened here with this breaker, low, high, low. It is sometimes price moves before I actually get these slides recorded, right? Now, what I am anticipating is I want to see price run lower into here, right? And the same...
There's no way. There's no way. Actually, there is a way. Where is this? How can I not find this? I mean, we did run into this imbalance. Oh, is it right here? Yeah, it is. It initially did. But then we came back down to this old previous 25% gap in 25% of that DRT level. And into this. Wow. Wowzers.
Same thing that happened here with this
I noticed that like inversions, when they get respected, constant encroachment of that gets respected.
breaker, low, high, lower, low, inside of that 50 DRT. I want to see this act as an accumulation block and this buy side imbalance to become an inverse. Fair value gap. The consequent encroachment of this buy side imbalance also overlaps with the discount end of that higher time frame orange shaded inverse fair value gap, right? So we have a level of confluence. So I'm not just randomly picking out levels, right? You by now, if you followed me, you know that this is very logical, okay? How high we can go, we might touch the discount end of the higher time frame balance price range. So this is a weekly fair value gap, the discount low of that balance price range. But I'm going to wait for Monday to get out of the way first. This over here, if I'm awake, generally I don't trade London. It's too early for me.
Oh,
But
but
if I am awake, I may see
this
what
all
gets
happened
today.
after the draw
Yeah,
got
just
met.
depends.
So like we already hit the draw. Like we were in a hurry to get the draw, and then we come back lower into this.
For me on my schedule, but New York is generally where I'm in. If we have already run the equal highs by New York, then I'm just going to sit on my hands and wait. I still anticipate price to run lower. This is a very shallow sweep down here, so there's still a big pool of sell side liquidity. So I anticipate early on, maybe Monday, Tuesday, to run higher and then to drop lower towards the end of the week.
Monday, Tuesday, right now. Oh, we hit that buy London session. We hit that in Asia. Then Tuesday we put in a low of the week, and we expand. So, wow, notice that we were in a hurry on Sunday to get there, to then have a Tuesday low of the week. Then have this big expansion week. So Sunday we had big expansion. Monday drop down lower per usual. Tuesday low of the week, and actually in London lunch actually. That's funny.
Again, this is due to my analysis on the dollar index, which I've already outlined. I'm looking at that volume imbalance. I actually haven't seen if it's traveled into it, to be honest, on the lower time frame, but I'm looking at the volume imbalance on the dollar index and that 25 DRT higher time frame level to see if we get any support there. And if I see that, number one, and I'm looking for some kind of SMT divergence outside of the dealing range. So if this travels above here, but the dollar index or the pound fails, to move outside of their respective dealing ranges. For me, that will be a valid SMT. Then I'll look for some kind of displacement to the downside and then find something like a fair value gap or a lower time frame DRT level to key off to take a trade lower below all these lows down here and the big pool of sell side liquidity down here. So that's what I'm anticipating for the coming week. I could be wrong, but I've not done too bad so far, to be fair, given that Forex is very messy and hard to trade right now. So I'm quite impressed myself, I'm not going to lie. I think this is all for this mentorship. That went quicker than I anticipated, to be honest. I really would have enjoyed to continue doing this. But I have so much preparation to do for this bootcamp, and I've got so much stuff, free content coming out for this YouTube channel. Please subscribe to the channel if you haven't done so already. There are a lot of you who are watching these videos but haven't yet subscribed, so I'd really appreciate that. There will be a further update coming maybe at some point in the next few weeks regarding the bootcamp, where I'll have a little bit more of a structure and I can give you a guideline on price and whatnot. I know that I have a massive amount of interest in that already, and I don't want to take on more than a few hundred people because I won't be able to give my attention to you guys the way I want to. So I got a feeling that those places are going to be taken up pretty quickly. But again, if you're interested, the best thing to do is click the link below to the ebook if you haven't downloaded that already, because that automatically gets you to our mailing list where we can send you more information. So anything regarding the bootcamp and enrollment will be sent via email to our mailing list. And there's obviously a whole lot of other perks and stuff with the mailing list.
We finished
I give
it.
you a lot of my psychology thoughts or education advice or free gifts in terms of mentorship videos and whatnot. So yeah, I think that's it. I want to say a massive thank you for all of you guys who have supported me, who have watched these videos, who have learned something, who have sent me comments and messages. It really, really means a lot to me, and it really, really does inspire me to continue to do stuff like this. So again, I really want to thank you sincerely, and hopefully I will catch some of you guys in the bootcamp. So yeah, take care, guys.
Whew. Wow. Finish her up. That's a good watch. I'll probably go back over it at some other point in time. Maybe not right now, but DRT, how gaps form within the market, what type of are we equilibrium, discount, extreme premium, extreme discount. And when we're consolidating, we go to extreme premium to extreme discount, and from extreme discount to extreme premium. Why don't you use glasses like blue light glasses? I Low-key, that's not like a bad idea. I feel like I think I have screensaver. I have like eye protector. Like my screen's like a little bit yellow to block the blue light. Let's see. That didn't do it. That doesn't do anything, I don't think. But I think my monitor. I don't want to like accidentally turn something off here. I know I have it on one of my monitors. That might be too dark though. We'll see. I'll get used to it. Hold on, I gotta use the bathroom. I'll be right back. And then we'll finish this up, and then that'll be the rest of that. And then I kind of want to watch another lecture. I kind of want to watch or listen to like some psychology, you know. Yeah, I kind of like this. It's a little like I changed my brightness. Premium to discount. Discount to premium. Extreme. Also, do you think that order block is important? Yes, 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 yes. I really, I personally, I think order blocks. I think I like order blocks the most out of any PD rate, honestly. But fair value gaps are also important. I would say order block and fair value gap are the most important. And a breaker block is pretty much just a order block that gets traded through. Because here's the theory behind an order block. So if there is a smart money entity, which I'm pretty sure we can all agree on, they constantly have to hedge into the market because their positions are so big. Since they're trading with a large amounts of money, they have to constantly hedge into the market. So therefore, anytime this drops, they are buying as it declines. So then when it comes back up, since they were already buying here, because they have to hedge into the market, into their positions, when it comes back down to that level, they should therefore buy again. And that's the theory behind order blocks. So then if they bought before when it was like this, therefore they should be buying it again when price trades above it to capitalize on their positions. But if we fail to respond to that order block, see how we have had 1, 2, 3, 4 candles there? That shows the unwillingness or the fact that smart money is not interested in buying again, and maybe they just took off their positions up here. But like good order blocks, you're going to see quick responsiveness to, like this. We come back down, and then we come right into this order block right here, and look at the reaction straight off that order block, showing that, hey, buying really did, smart money really was buying within here. So then when price comes back right here, down here into this order block, they're going to be buying again. And then, as we can see, the responsiveness. That's a true statement. I really like that. Why are you complaining about the results that you're not getting, or why are you complaining about not getting this and not being there within a year or two in a job and a career with no ceiling? Like there's no ceiling into trading, and yet you can't complain about those year 1, year 2, year 3, year 4 results. That's why I don't know. I think that I I'm probably not going to take a trade for a whole 2 years. Well, maybe not to take this place to trade, but I think I'm going to go to live within like a year out. We'll see though. Hey, have a good one, bro. Appreciate it. We've done it. We've done it, laddies. Officially completed it. Episode 9. And all the notes. The RT theory, or DRT, which is digital range theory. Dealing range theory. Hey, I don't know if YouTube's gonna upload my video. ICT posting anything? No, he's still silent. What next? It's always something else. Maybe like a 2023 mentorship video. I kind of want to go over maybe a previous one.
and that high knowing where price is going to go, that's your number one goal. Because everything else outside of that is going to get you in trouble. Order blocks, fair value gaps, all those things. If you don't have the direct...
What is this from? Alright, we'll watch this. We'll watch this. Kind of want to pull up my previous notes too. That was a minute ago that happened. March 23rd. I think that's it. Oh yeah, it's this one. Is smart money getting a short? Where's their ideal exit for them? What is price more likely to do? Trading scheme probabilities, uncertainties. All right.
So this book called Six Figures from Scratch is designed to keep open.
Obviously, what fits good in that condition? Silver bullet, 10 o'clock to 11. You can do the macros that I'll talk about tomorrow. We're only going to teach the macro in itself is just a time window where the 950 to 1010, what this is actually specializing in.
I just watched that recently.
I'm telling you, I'm going to prove it to you too. Low to high. Okay, now watch. All of this is occurring, by the way. All right, so I mentioned this morning with tweets that we had a opening range gap from yesterday's regular session hours close to today's electronic trading. I'm sorry, regular session.
Oh, that's why.
By looking at it like this. Okay, so here's that close from yesterday, where we opened today. We rallied all the way up into that gap at 255. I mentioned that here, and I said extend it out, note that. Well, I told you it would hit this, act as resistance, trade down into this imbalance, which was
March 23rd. What would that be? ESM. March, April, May. Yeah, it's BM. USH. Well, this is 16th. Dang, I can't get it. Should we gamble? Hey, you can't get the 5 minute. I don't know why it was like that. Wait, so we're looking like on the hourly chart. We have a 2 p.m. sell off. This happened at 2 p.m. Wait, was that FOMC? Okay, so FOMC. We have FOMC this day. Where do we reprice to? Well, we have a fair value gap right here. But more specifically, probably a new day opening gap. I guess it's kind of cherry picked because we have all these new day opening gaps. And then we break down displacement. New day opening gap right there at 3. So FOMC just happened.
Low to high, lunchtime, sell side liquidity. We have the market having returned back into this fair value gap there. I'll note it. I'm going to try to keep my annotations light. I already have a lot already on the chart, so trade it up into that. And we're going to be looking for the market to trade back down into sell side here and dig into this a little bit more. Okay, and we'll go back into electronic trading hours. And we have sell side here. Dollars firm. If you look at your 15-minute time frame on Dixie, DXY, 15-minute time frame, you can see we have relative equal highs from this morning. You might want to run up into that. And then we have actual gaps in the Wednesday 7:30 p.m. time window. So I might want to trade up into that 102.50, 102.55 per dollar. That would be risk off for ES. So let's drop down into a 4-minute chart. 3-minute. 2 minutes.
She get nice sell model
Actually,
here.
go back up to the 3-minute. See how we have this really nice, easy to see SIBI here?
Overlaps with this one.
Drop down to the 2-minute. I mean, it's there, I guess, but I like the way it looks on the 3-minute. And then we have a volume imbalance up here as well. So we're at the opening range gap. That's what the shaded area is down here. I'm looking for the market to try to trade back down into this area here. That will be sell side and the old daily fair value gap, SIBI low.
Oh, look at where we touch equilibrium right there.
Let me see if I can pull it up here.
75% silver bullet.
It is this big down close candle here, using this candle's low as the high, that candle's high here as the daily fair value gap SIBI low. Okay, so that's what I'm looking at. Got a nice big wick here, so we'll drop back down. Lower time as the high, that candle's high here as the daily fair value gap SIBI low. Okay, so that's what I'm looking at. Got a nice big wick here, so we'll drop back down. Lower time frame. We get animated on the downside, and we completely go back to yesterday's closing price for the opening range gap. Then we can maybe consider the new week opening gap that's current this week. And I got
Right
a question
there.
from one of the students on Twitter. How do I make my lines like this? First of all, I'm using TradingView, obviously. But when you're dropping a horizontal ray, all the settings are this, okay? So you can see everything. And the text is set to middle and on the right. So that way, no matter what I do on my chart, it'll always be on the right side. Okay? So let's throw that in your next charge.
Thanks, Michael.
So I'm looking at the Dow has relative equal lows on its hourly chart. I'll take a look at that real quick.
Here's the breakaway gap.
Right here. That's too clean. And below that, if we drop down, we have this small little gap here for Dow traders, and then we have all the imbalance in here. All this back and forth in here. You want to look past that. If it's going to drop below here, it might dig into this area down here. And then we have these relative equal lows. Can you see that? And then we have all the imbalance in here. All this back and forth in here. You want to look past that. If it's going to drop below here, it might dig into this area down here. And then we have these relative equal lows. Can you see that? So back to ES. Let me do NASDAQ, then there's something you'd like to trade down to. Okay, so NASDAQ has sell side here on the hourly. I mentioned the consequent encouragement of that wick earlier today. We had a little bit of wick past it, but so far it's been doing okay. And then let's go back to ES now. And 5 minute. 3 minute. So today is obviously the immediate day after FOMC, and whenever we had an FOMC event or a large range event, a lot of volatility and such, the very next morning session, you don't want to be doing too much of anything. Doesn't mean you can't paper trade, doesn't mean you can't study, obviously, but too many individuals want to go in here and try to chase it with their funded accounts or their live accounts, and it's
Reaccumulation zone lines
difficult
up
for them,
nice with
especially when they've
equilibrium.
seen the type of price action that's following a large range or high volatility event. So plenty
That's
of
how we hit negative
the last
2.5
hour
first, and then we come
trading.
back up to negative 1.5 to
Okay.
reaccumulate.
Spending time past 3 o'clock until we get something that would be noteworthy. If something happens and I miss it, and I don't be able to call it out live, then it'll be just a missed opportunity. But my bias is bearish. I don't look at this as going higher. I have nothing in here that wants to see a buy side run. Now, when we have these opening range gaps, it's important for you to obviously treat them the same way I teach you to use all of the gaps that I like to use in technical analysis. They're not one and done, okay? So we extend them to the right. So right now what we just did, we've taken out sell side right below these two relative equal lows. Now I want to watch to see, does it come back up here and touch the top of that opening range gap? If it does, we would watch that to see if it wants to expand from that point. It may not do that. It may not do it at all. But I'd like to see it trade up to that level there, and which would also be what? Look to the left. What do you see?
I don't really like opening range gaps, but ICT uses them a lot, or he talks about them a lot. So maybe there is maybe I should start looking at opening range gaps.
Consequent encouragement of that wick. So if it trades to that level here, hits it, then expands down, we would expect for sell side. We also have a gap in here, so we would like to see that trade down below it, come back up and act as what resistance as I've outlined. This one would be this morning, or we have some other, and we've seen it happen in the PM session and trade it softer. And let's drop down to a 1 minute chart now. See the volume imbalance here at the top of that shaded area as well. All I've done is shown the range between previous day's close, regular session, to the opening price at 9:30. So that's this range here. That's what's being indicated. Okay. So watch the volume imbalance in here and the high. There really is no need for it to get up into here. Even though you see this here, I don't think that it needs to get up there. Sorry, I know those water bottles are noisy. That run into and then the gaps in yesterday's opening on the 1 and 2. There's an actual liquid. So if we can get. Okay, so we were able to get back up in this area. I didn't want to see it do that. I definitely don't want to see it up in here. I want to see it kind of stay heavy in here. We're in the 2 o'clock hour. NASDAQ on your 5 minute chart for now. All right, so now I would like to see this candle that's forming right now. We're on a 1 minute chart as a reminder. I'd like to see this candle close, leave this little bit of a gap here, trade up into it. It doesn't have to hit the high, that shaded area, but then I would want to see it go into that area and then sell off going into the sell side right in here, okay? Pop just above this candle 25 even or sell side. Otherwise, it's probably just going to run away without me, and that's fine. Vision, huh? It would never be seen. I have a lot of stuff like that for the rest of the year. All right, see how we're trading into that gap now? Okay, so you want to kind of screenshot your chart like right here.
And there's an order block there too.
There, that's good, just like that. And then monitor how it trades from here. Again, down below here. Range in days like are reluctant to just run away for you in your favor. Many times you'll get retracements farther than you want to see, a lot more consolidation than you want to endure, and it's very frustrating, especially if you're accustomed to seeing very quick, low resistance liquidity run conditions for your setups, which is what you should be looking for. You should be looking for that in price action and trying to get those types of setups predominantly in your studies or in your executions. Watch that wick here. Mindset, I believe, things that would be at a bearish order block. The fair to see this here. It's mentorship, big folks. A little bit more of a sacrifice for them to looking at a full count, but that might trade in the London session, which is a very, very difficult one in the United States. Dollar that is confirming that it wants to go up efficiency here. Dow is still struggling with their body. If they aren't touching at least, there creates this separation. Even though there's a wick here that goes down into this candle's body and there's a wick on this candle that goes up into this candle's body, that is a volume imbalance. And the market tends to go back up into those areas, revisit it, reprice it, and then move away either in your favor or against you. I don't mind the volume imbalances being traded through. That's one of the very flexible PD arrays, which makes it unfortunately difficult for students to learn because you want them to act like, you know, an order block or a breaker where it's very finite. It does this and nothing else, that type of thing. But you're also learning that all of my PD arrays have a inversion aspect to them. So when the narrative changes, what used to be a bearish PD array can be utilized as a bullish PD array. So it provides real context to the classic view of support and resistance. What I'm not doing classic support and resistance, I'm showing you the actual underlying pinnings of the market that creates that buying or selling idea with support resistance theory without leaning on the classical find an old low, find an old high. I'm not doing that. I'm showing you within the context of price delivery. So now watch that volume imbalance again here. We keep digging up into it in here. So it hasn't in the form of a volume imbalance too much. It's okay for this low out with this low, but short term, and we'd have to watch and see, does it want to respect the high end of that opening range gap, which is this shaded area. It can go there, have a little bit of a wick through that, and that's permissible, that's fine. But I would be, because of the time, I would be willing to allow for now that run above this short-term high here because we have relatively equal highs. Stop losses are going to be what? Trailed lower. So there's a small little pool of liquidity in here. And if the market trades up to that point, we'd want to watch and see, does it quickly reject that level and start going back down again? If it were to do something like that, then the next pass through this low here should be accelerated, and it would quickly want to get down into that liquidity down here. So it wouldn't be the opportunity to be pulled away from the marketplace. In other words, anyone that would have a stop loss down here in the form of a sell stop, whether it's sell short on a breakout lower or trailing it or keeping it there from this morning because they're a long-term position trader, they are just waiting to be engaged. So when the liquidity gets taken, should it trade down here, all those sell stops become a market order to sell at the market, which would be a real good reason for the market to be covering shorts there because there's a plethora of willing sellers at a lower price where short can buy back their short positions from those willing lower sellers. Downside, no. So it's short-term oversold without an indicator. And if it's going to go up, is there any imbalance in here? There's this one. And we'd have to watch and see, does it want to respect the high end of that opening range gap, which is this shaded area. It can go there, have a little bit of a wick through that, and that's permissible, that's fine. But I would be, because of the time, I would be willing to allow for now that run above this short-term high here because we have relatively equal highs. Stop losses are going to be what? Trailed lower. There's a small little pool of liquidity in here. And if the market trades up to that point, we'd want to watch and see, does it quickly reject that level and start going back down again? If it were to do something like that, then the next pass through this low here should be accelerated, and it would quickly want to get down into that liquidity down here. So it wouldn't be the opportunity to be pulled away from the marketplace. In other words, anyone that would have a stop loss down here in the form of a sell stop, whether it's sell short on a breakout lower or trailing it or keeping it there from this morning because they're a long-term position trader, they are just waiting to be engaged. So when the liquidity gets taken, should it trade down here, all those sell stops become a market order to sell at the market, which would be a real good reason for the market to be covering shorts there because there's a plethora of willing sellers at a lower price where shorts can buy back their short positions from those willing lower sellers.
What's the win rate of ICT?
This again is a reminder.
I mean,
This
I
is the
don't
type
know.
of day where
It's all dependent upon
yes,
the
I can see
trader.
setups. Yes, I can point them out to you on Twitter, but it's more meant for you to see how
It's pretty much just teaching how the market moves.
different, how much more difficult price delivery is in days like this, where it's right after FOMC. It kind of like is a recurring theme this year in this mentorship with you all, because obviously I've taught how to find the good setups in all the core content, the videos and lectures I've done on YouTube. But sitting with me over real-time price action and outlining what constitutes a low probability condition, what constitutes a high probability condition, and training yourself to what, understanding what it feels like while you're watching price when it's not a good, really easy low resistance run condition where the market just rips in your favor, you don't have any drawdown, it's quick and goes right to your targets. That's what I'm training you to look for. That's what I train my students to look for in price action. And we're back at the high of that opening range gap. High. And as I mentioned before, it could spike up through that and take out this high maybe in here. And then I want to see it reject that, not keep wanting to climb up. That's not what I want to see here. In fact, if it were to do something like that around and before 230, 240, that would be, in my opinion, a reason to anticipate much more than just the opening range low at here and buyers, and the reason therefore. The real hallmark to this year's mentorship is I'm spending my last year teaching in this capacity. I don't want to be doing this, once I get to the second week of November. It doesn't mean I'm going to fall off the planet and not communicate with anybody, but it just means that the level of engagement that you guys are used to now won't be so high. But it's important for you to be able to see what it looks like when the market is fickle. Okay, when I say it's fickle, it's very hard. It's very hard for a new trader to trust in these environments, which is understandable. The mature students of mine that have been with me for a while and they know how to find low resistance liquidity run conditions where the market just runs real quick, has those explosive price moves where they have the big ranges and they don't even come back and fill in the ranges, it just keeps on going and going and going and going. Those types of moves, you learn how to find them by looking at these types of days and these types of conditions. And yes, you can make a career out of trading in these environments, but my question is why would you want to do that when there's days where you can go in there and inside of 20 minutes your entire day's done? Whereas something like this here, you have to babysit it for a long period of time. It consolidates, it retraces, it does a lot of things you don't want it to do. And the whole time you're in these types of days, you're expecting the things that you learned in books to pan out. All these patterns and things, continuation patterns. And it is very frustrating if you don't know what you're looking at because you're trying to project your expectations about how the market is likely in your best favor to perform, but it's reluctant to do that because, hang on a second, these stupid batteries are rolling off my desk here. You have to submit to a lot more frustration in these days. So if it's your goal to look for days where you go in there and you do the least amount of time in front of the charts, which is always a good thing, especially if you know what your model is. In the beginning, you have to submit yourself to a lot of this. Okay, you're gonna have to be in front of the charts, studying, looking at old price moves. That's my backtesting. It's not going in there using market replay. That's something entirely different. But you have to take a lot of screenshots and study. And then when you look at the charts, you want to write on them how, if you could go back in time, being shorted an old high after it took out a previous high, and you classify that as a smart money entry on going short. And then you would look at the chart and say, okay, if that was the case and that smart money entity is going short there, where's the ideal scenario for them to look for an opportunity to get out of that trade, which would be below an old low where sell side resides, or a discount inefficiency. The next inefficiency, if you go on ES, when you're 1 minute, I'm not going to move my chart because I want to keep it right where it is. If you look at your chart on the 1 minute on the 910 candlestick, there's a small little fair value gap there, and it's in the form of buy side imbalance, sell side inefficiency. You want to draw a rectangle on that, extend it to the right. It's essentially 39.85-ish, thereabouts. So that's the next drawdown.
That's that new day opening gap he was pointing out. Well, it's the open range gap high, but it's also new day opening gap.
Now that right there, what I told you about trading back up into the high end of that opening range gap, that stuff's not in books. Okay, that's not, nobody's teaching that. They're going to teach it now because I'm showing it to you. But that in itself right there, that's perfect for a 5-handle run right there, and that could be your entire model. Or you could wait for it to trade under that 39.85 level I mentioned just a moment ago, which is the next inefficiency. Then the sell side is at 39.82.5. But high resistance liquidity runs like this, see how it moves a little bit, then comes back, rebalances, moves a little bit, comes back, rebalances, moves a little bit. It's very, very, to me, I'm bored by this kind of stuff. Like I don't, and not in the sense like, I mean, all of it's boring to me because I know pretty much what it's likely to do. But when it's like this to me, I'd rather do something else. I'd rather read, I'd rather go do something else with my family members, take my dogs for a walk, whatever, and not be in front of the charts. And you might not feel that is something you would want to do because you look at this and thinking, this is making perfect sense to me. It went up into that fair value gap you talked about here at 2 o'clock, here, traded up into the high end of the opening range gap high. It did that. It broke lower, came back up, and displacement to the downside. That in itself is 5 handles. You can literally replace your job with just that move, that by itself. It's all it requires. But unfortunately, you see me doing 100 handle moves, 50 handle moves, 30 handle moves, 20 handle moves, over and over and over, example after example, and you think that that's what you want to do. That's what you want to do because you see the hypothetical paper trade results in the monetary sense, and you think, if I could just do that. Whereas if I'm trying to teach the skill set to you, I want you to be able to feel confident that you can find the least of all things consistently every single day. Even in hard days like this, these types of setups form continuously. And when you sit with someone that can talk about it before it happens and explain the logic behind it, and you get to see it, experience it, that's mentorship. It's a very comforting feeling because there's no emotions behind it. There's no necessity for it to be profitable. There's no concern for it to be incorrect. You're studying it. You're learning how to submit yourself to it because the market's going to do what it's going to do. And you can't hide it. There's your 39.95. It's almost like a dog whistle, isn't it? Come to daddy, go down the sell side, 82.50, that's where it's resting. And I want to see it, I would like to see it, rather, spike through 39.82.5 and get into that 39.78 at least touch that again. That would be cool. But how we trade, if at all, to or through 39.78 that is indicative of how we trade going into the close, in my opinion. Dollars found its wings here. I had to take out that short-term low right around that 143 time window. What is that? Well, 1 minute chart, took out the low. Yeah, 142. So I'm back to wanting to see looking at here to get tagged. It's at 9:25 this morning. It's up the ghost. It's now fair value got city low. Oh, you folks. It's boring, isn't it? It's like a Groundhog's Day event. You ever see that movie Groundhog's Day with Bill Murray, where it just repeats over and over and over again? That's what it's like in this community. We look for the same things that happen all the time, and it's fun. We don't get animated. We don't get crazy about it. We don't flip around and get all hopped up on goofballs. But it's just very relaxing. It's meditation for me, and I'm sure for you it's like a thrill ride because you're seeing something being proven every single day. Every day. Precision, delivering consistently. There's no mumbo jumbo to it. It's based on real logic that the market's going to work off of and how they book. So that was the price run for this afternoon. I know I said I would try to stay with you until a little bit into 3, but that's about as much as I would want to have as an example, trying to push you into something. The remainder of our time here, I want you to think about what is more likely to occur here. Is it more likely for the bottom end of that shaded area, which is down here? Is it more likely for that to be for this afternoon? I know I said I would try to stay with you until a little bit into 3, but that's about as much as I would want to have as an example, trying to push you into something. The remainder of our time here, I want you to think about what is more likely to occur here. Is it more likely for the bottom end of that shaded area, which is down here? Is it more likely for that to be traded to here next, or for it to come back up and take out this high? What do you think is more likely to occur? Don't be afraid to, make a choice and be wrong, because this is what you're doing this year with me. You're watching price. You're supposed to be watching this without any kind of, and I know some of you already shorted this. I know some of you probably already tweeting to me saying, "High five, woo, we're going to the club." I don't want to see that. That's why I don't look at Twitter while I'm talking to you, because I know invariably I'm going to see something that's going to get in my head, and I'm going to be worrying about you doing something based on what I'm saying, which is what you shouldn't be doing. Don't trade on this in place, because it's just me talking about price action. I'm teaching you how to submit to this process. I'm teaching you how to read price action, why it should do certain things, why it shouldn't do certain things. And because you're going to see example of this every single week, every single day, whether I'm doing it live or whether I'm talking about it in Twitter, where it's all time and date stamps and I'm taking your attention right to specific candles, you're getting a comprehensive learning experience that you can't really get anywhere else. Okay, it's one thing to listen to somebody talk about, okay, here's a signal, I'm buying here, I'm selling here, this is my target. But you don't really know why they're doing the trade, which begs the question, why are you even doing that? Like, how do you know what you're doing is going to pan out? You're basing your belief system, your religion revolves around the person that you're trusting that signal derives from. And to me, that makes no sense. Okay, so we traded down into that CB low, which is what I want to see. So now it should have no difficulty at all trading down into the low end of that shaded area here. And it should remain heavy. Heavy is like where it just keeps wanting to go lower, having really no interest at all wanting to go higher. Just for purposes of later on in reflection for me as the mentor, give me your feedback on what it feels like seeing this unfold like this, understanding where these turns could form, how much it could trade higher up, and if it was to do so, what that would indicate, how to anticipate where the market's going to gravitate to, draw to, which is the number one thing you're trying to learn first, and throughout the process of you discovering what your model is, and as a trader, what you're going to do, knowing where price is going to go. That's your number one goal, because everything else outside of that is going to get you in trouble. Order blocks, fair value gaps, all those things. If you don't have the direction right, and that doesn't mean bias, okay? It doesn't mean bias. It means where's the next draw on liquidity, because you can trade without a bias. Okay, I saw a tweet, and for the life of me, I apologize, I can't remember. I believe the person's name on Twitter began with the F-E something, whatever. They asked, is it important to have a bias to trade intraday, or must you have an intraday bias to trade? Or can I trade just the internal intraday liquidity? Once you understand what you're looking for in the aspects of time of day, And when certain macros come in, and again, a macro is knowing what or can I trade just the internal intraday liquidity? Once you understand what you're looking for in the aspects of time of day, and when certain macros come in, and again, a macro is knowing where the market's likely to draw to next with liquidity, and the time. So you have to know really what you're looking for liquidity and who's been making money right now. That's essentially what the macros do. They roll against who's in the money right now. That's what their function is. Because whatever movement in price action that's been unfolding as of recent, whether it be a 1 minute chart, 5 minute chart, 15-minute chart, whatever, at specific times of the day, and yes, I will teach you these macros, okay? I know it seems like I'm not trying to do it, I am, but I'm teaching you other things that will help you when I do the lecture.
Okay. I mean, I don't know if he can trade or not. That doesn't really affect me, to be honest. So I don't really care how he trades, because if he's able to, if he gives good, like at the end of the day, if he gives good psychological advice for free, like I can't complain.
You're like, oh man, okay, I understand what he means now. Because if I do it prematurely, all you're going to do is have 1,000 more questions that you're going to clamor to me on Twitter or send me emails that I'm not going to reply to, or talk to me through TradingView, because there's too many of you coming at me asking questions that I physically am one person. I can't do that. So you have to submit to the way I do things, which unfortunately, even my paid members, when they came to me, some of them were impatient. They thought they knew how to learn how to do this without even knowing how to do it. And they would get frustrated and quit and run away and think that it doesn't work because they don't have the patience to listen to somebody that knows what they're doing. You want to be mindful of certain things I'm talking about in the daily range, the weekly range, and how these intermarket relationships tie together at certain times of the day. When you understand those things, and then I introduce certain things that I'm talking about in the daily range, the weekly range, and how these intermarket relationships tie together at certain times of the day. When you understand those things, and then I introduce the macro certain things that I'm talking about in the daily range, the weekly range, and how these intermarket relationships tie together at certain times of the day. When you understand those things, and then I introduce the macros and explain to you what they are, why they form, what their purposes are, it will make perfect sense to you, and you'll anticipate these things happening in the market. You'll know exactly what is going to most likely occur at that interval right now. In a 20-minute span, you know that there's going to be a setup for me. You could set your watch to it. You can sleep in and say, okay, I don't care about anything else. I'm going to go right in there. I'm going to trade based on what I see within that 20-minute window. And then find your 5-handle, 10-handle move, turn off your charts, and go back to doing whatever you want to do. And folks, nobody teaches like that. They want you to follow these moving average cross 20 and then I introduce the macros and explain to you what they are.
Well, saying someone that has the best psychological advice, that's just subjective. So like I could say some random person has the best psychological advice. Someone else wouldn't agree with that.
Why they form, what their purposes are, it will make perfect
I don't know. I don't like to argue over like the best things, the best way to do it, because it's all subjective on who you are. So I respect your opinion, and I don't know why people get so caught up in who trades what. You should only trade what you should only care what you trade, and that's what I care about.
sense to you, and you'll anticipate these things happening in the market. You'll know exactly what is going to most likely occur at that interval. Right now, in a 20-minute span, you know that there's going to be a setup forming. You could set your watch to it. You can sleep in and say, okay, I don't care about anything else. I'm going to go right in there. I'm going to trade based on what I see within that 20-minute window. And then find your 5-handle, 10-handle move, turn off your charts, and go back to doing whatever you want to do. And folks, nobody teaches like that. They want you to follow these moving average crossovers and trend lines and all this other stuff. See, we're below the opening range gaps low. See that? So now our attention goes to the new week opening gap high. If you look at the range from here to where we are right now, half of that is right in here, thereabouts. Okay. So if we looked at this high down to the new week opening gap high, that's also about halfway, which would be what? Like a measuring gap. So when I look at targets where I've already outlined, I said I think I'd like to see this level traded to. That's one part of it. Also, because we have left this gap here, this fair value gap here, I'd like to see that stay open. Why? Because it happens to fall about midpoint to where my next target would be, which I told you earlier when we were up here. I said I'd like to see it get through the bottom of this. If it does, we'll gravitate down to that new week opening gap high. But because we have this range high here, which is the opening range gap high, and I understand that this feels like 1,000 things swirling through your head. What gap is what? What are you talking? I have lectures for all of this. But it's important for you to see me discuss them real time because there is logic behind what it is I'm teaching you. That way when I'm putting a video up that's pre-recorded and it's all the theory behind it, you'll remember, oh yeah, that's what he was talking about. And he has lots of examples of that. And you can go to these live streams because they're recorded, click on my little live tab or go into the 2023 mentorship. That's where they're being added to as the playlist. You'll be able to go through and hear me talk about these things. And it was over live data. It wasn't pre-recorded. It's not cherry-picked in hindsight moves. It's not market replay. Everything's here for you to see that was happening in front of everybody that's watching it. But if we have a target and we know where the inception of a price move should form, which was again at the high of this
Do range theory.
Remember I was mentioning, I said it would be permissible for it to spike up into here. That would be fine. It would be better had it done that and then started to break lower because in my opinion, we would have already been trading at the new week opening gaps high down here by now if it would have ran up and took that high. But it's not necessary. So if you were trading this, you have to trade with leverage going short at the opening range gap high, but allowing for a run above this high here and this high here, which can be scary. Or you would wait for it, had it done so, if it would have spiked up there and broke down, you would wait for the standard fair value gap to go short inside of, and then ride it down to the opening range gap low, and potentially if it goes lower down into the new week opening gaps high. So you don't see the benefit of doing that or even understand.
Are you using AMT? I'm not.
Spiked up there and broke down, you would wait for the standard fair value gap to go short inside of, and then ride it down to the opening range gap low, and potentially if it goes lower down into the new week opening gaps high. So you don't see the benefit of doing that or even understanding that if I talk about it conceptually in a pre-recorded video. If I give you rules about this is what you can do, this is what you can expect, what's going to happen is because there's so much information on my YouTube channel and there's so many different videos, it feels overwhelming. Like, where do I go with all this? Like, this is a lot of stuff. You should be in these videos, the live sessions, because I'm literally holding your hand, and everybody that's watching all the older videos and not watching these and thinking they can come back to them later on, you're doing it incorrectly. You're doing it absolutely incorrectly. You don't want to push these later because this is what people paid me for. When I was teaching mentorship, I was doing this. And because like some of you are new, you want the, give me the short sell entry, give me the stop loss, give me the target, get me into a trade. My first round of intake for mentorship was very frustrated. And I lost a lot of people going into month 2 because they wanted that spoon feeding, give me a trade type thing, even though they signed an agreement knowing it wasn't that. We were watching and studying price. You should hopefully, because you've seen many examples, and that's how everybody finds me. They see what my recordings are done, like their executions. You want to see how I'm doing that. Well, I'm doing that right now, explaining it with real-time charts. I'm telling you where the logic is, what is in my head, what the algorithm should do, why it should do this and why it shouldn't do that, and where it should draw to. And I'm giving you the points of reference, how I get to that. This is the level I think it's going to go to. So if you don't watch these videos, if you can't sit through them because it's a lot of talking, you think it's a lot of this, you get to the point. The point is I'm teaching you. I want you to know how to do it correctly. I don't want you learning from somebody else on YouTube that doesn't know how they're doing it. They're getting lucky, and once in a while they have an event that makes them seem like they're consistent. You have to simply sit down with them every single day. If they're going to do it, be willing to do it for you. Do it every day. If I'm not here live on YouTube, I'm doing it live in Twitter. I'm constantly bombarding you with evidence that this stuff repeats over and over again. But you're not going to appreciate it unless you understand what the purpose is. The purpose is for you to desensitize yourself to the fluctuations in price. And trust me as the
That's a good quote.
coach that's going to put you in conditions that's going to be favorable for you with a model that you don't really know that you're going to be using yet. Because there's certain things that you probably want to do right now. If you want to trade fair value gaps, or you want to trade breakers, or you want to trade something else that I've taught. Many times my students have come through that because they watched my videos leaked on Telegram for years. They were out there and they're still out there. And they thought they understood what they wanted to learn when they finally said, I'm going to go right to the source. I'm going to sign up with ICT and join this private mentorship. And no, you can't do that. And no, I'm not doing future mentorships. And no, I don't want your money. And all, I'm teaching you right now. I'm actually teaching you better live like this than I did because I don't have any of you constantly asking me questions like I had when I had 865 people in my first class.
That daily
They were
Sibi
asking
though.
me tons of questions live. And I can't focus. Nobody could. Nobody could do that. Nobody can do that. Okay. And it was very frustrating for me. I was overwhelmed with all of the, the fever that everybody was asking because I want to answer everybody's question. And when you send me emails, I want to be able to do that, but it's impossible. Like, look at the comment sections of my videos when I open them up. I can't sit there and answer all those replies. I would never get anything done. I'd be divorced. My wife would be like, I don't even know you anymore. I already spend too much time with you as it is. So I try to do as much as I can, and I think I outperform everybody else out there in education, whether paid or someone that's charitable like I am now, giving it out for free. Get ready to hit that new week opening gap high. It's almost like it's written in the stars. But when I'm talking to you, I'm lecturing you because I want you to understand why it is that you should be submitting to some idea that I've taught or am teaching. Because if you don't know that, you won't know what to reach for when it's not moving in your favor. And when we're here consolidating like this, some of you probably thought this drop down here and said, oh, it's got a pin bar. Oh, look, it's going up. And you were thinking it's going to reverse and go back up and fill this gap. You know who you are. You were hoping it was going to do that because I said it was a measuring gap. I taught you what a measuring gap is now. Inception of the move here. Terminus. Halfway, right in here. Where's the gap? Right there. What kind of gap's that going to be? Measuring gap. Measuring gaps don't fill. Just like breakaway gaps don't fill. But what happens if you do get a measuring gap and it happens to trade up and filling? Doesn't matter. I'll still treat it the same way. So see what I just did there? How do you know when a measuring gap forms? I just taught it to you. You have to know where the beginning of a move happens, which I explained to you here. Where's it drawing to? Well, you have a couple things you got to look for. I told you the 39.85 level was the fair value gap, and we have to see how we trade there. Well, it traded down into the 39.85, then consolidated, broke lower, traded to the low of the opening range gap, low, rallied a little bit, consolidation leading to what? This is when your classic continuation patterns work. This is a bear flag. But I also teach when those flags are fake, and you can fade them where other traders would be caught offside. That's what's in my core content. So when I'm teaching you, and I'm trying to give you all of this experience that I have, it's for you to understand what your mind should gravitate towards when you're feeling scared about holding on to the idea that you're in. Watch the consequent encroachment now, here. Onto the have. It's for you to understand what your mind should gravitate towards when you're feeling scared about holding on to the idea that you're in. Watch the consequent encroachment now, here. This level here, it's a midpoint between this week's current new week opening gap. But if you don't have any experience and you're in the trade, I mean, you know what it's like. You probably got lucky enough to get a funded account challenge passed, or you had a live account that you opened up prematurely, and you put on a trade, and you think you know what you're doing, and then all of a sudden, you can't breathe. The market's not moving for you. You're not stopped out, but you start guessing. What's going to happen next? Am I going to get stopped out? Is it going to turn against me? What is normal? You don't know that. Why? Because you've not done what I'm doing with you here this year. That's exactly why my students that paid me fail. They're lazy. You don't want to be a lazy student. You have to be doing these types of things. I'm out here publicly proving that these things work. There's nobody that's going to be able to stand in front of me, whether in court or in public forum, going to say that these things don't work because I'm absolutely proving it. I'm cramming it down your throat. I'm stomping on your neck with it. There's no way anyone can say this stuff doesn't work. There's not any sound logic to it. There is absolutely sound logic to it. This is algorithmic price delivery. It's undeniable. These things repeat over and over again every single day. But if you don't want to listen to me, there's the consequent encouragement traded too. If you don't want to listen to me, you don't want to go through the proper learning experience, what's going to happen is you're going to go to Jim Bob's Dollar Menu Mentorship on YouTube. Okay, you're going to go to their Discord, you're going to go to their Telegram channel, you're going to go and follow whatever they're doing, okay, their Zoom calls or whatever they're doing, okay, and they're going to tell you, they're going to give you the 5-minute spiel on ICT. You're going to get into trades. You're absolutely going to do that because they're using my logic. They're not teaching you, they're parroting what I've done, what I authored. But they don't have the 30 years experience to guide you when the shit's deep.
We get the
and you have no idea
responsiveness off that.
what to reach for, what to trust. I'm sorry, folks, but plan your trade, trade your plan, that stuff doesn't work all the time. Especially if you don't know what the hell it is that you're expecting in price. You don't know when a certain series of candles is a real reversal yet, or just a simple consolidation or retracement to go lower again, or go higher if you're bullish. You don't have that yet. And these new guys that are teaching my stuff, they don't have that experience either. All of their funded students are funded because I spoke. That's how that worked. And these individuals that are trained to use my stuff from someone else, they won't be sustained. They'll lose their funded account because they're not learning with 30 years, 3 decades of experience. I've sat and watched these candles paint for 3 decades. I've had good days, I've had bad days, I've had good months, I've had bad months, I've had good years, I've had bad years. And I can tell you the story, what price is going to do on second interval charts. 1-minute chart. I do that because I want to make sure that there's next to no time for someone to take what I'm doing, unless you're clearly just taking my chart or whatever it is I'm doing, just reposting it somewhere else, pretending that you're me. But it's such a small interval, by the time someone that wants to take it and then put it in their Telegram channel and say they're doing it, it's already moved. You have to be right here under my wing. That's the number one reason why I'm teaching with a 1-minute chart. I'm removing any chance for all these copycats out there. And I'm giving you my time, I'm giving you my energy, I'm giving you my wisdom, and I'm telling you how I hurt myself in this business, I'm telling you how to prevent it from hurting you. And you would want to learn how to do that. If you were really trying to do this, and you were honest with yourself, you would want to know everything that I'm willing to give you. And unfortunately, that's going to come with a long-winded delivery, because there's a lot of stuff that took place in the last 3 decades that I learned from that isn't in books. So if you're here to learn, I promise you, you're going to learn things that no one can teach you. It's not anywhere else. I don't care who tells you they can do what I'm doing. They're not going to do it. I'll be here all year doing this. You might see 1 or 2 events by them, but I'm going to tell you exactly what price is going to do. And by the time we get to the second week of November, you're not going to need me. You're not going to need ICT. You're not going to need me to talk to you on Twitter. Watch the new week opening got low. That's our next objective, which happens to be this low to that high measured move down there. So that'd be a nice little run. If it does that, I will close the session with that. But you didn't push a button, ICT. Oh, I'm pushing a lot of buttons. A lot of people listening to me talk today, they don't like this. So yeah, I'm pushing buttons. But I want you all to succeed. I want you to do well. And I want to have a clear conscience when I step away from all of you in this capacity in November, that I've given you all that you need because you spent time with me over live data. If I didn't know what I was talking about, if I didn't know what the price was going to do, first of all, you wouldn't be watching me. You would already turn this video off. You would turn the stream off and go watch something else. But you know what's happening because you're seeing it happening in your chart. This is live data. It's real time. You can't fake it. It's right there. And everything's already on the chart. So it's not like I'm adding something to the After Effects type thing. It's not photoshopped. Everything's here. The logic as to why it should do it, I'm filling in all of that while I'm talking to you. So that way, when you ever get to the point where you make the decision, you do this on your own, but if you ever make the decision where you want to trade with real risk, whether it be a funded account, whether it be real money of your own, you won't feel lost when you're watching price action. All these things will be familiar to you. Oh, this is normal. Price should do this. Where the average neophyte, someone that's trading with retail logic, they see a candle like this, and they think it's the end of the move and the world's ending, and it's going to be a break your neck reversal type thing. You won't feel that simply because it's happening in the chart. Up close candles is a good thing. If the market's going lower, we want to see that form, because eventually, if it trades down below it, it will revisit that as what? A bearish order block, and you want to see that repel price lower. So when we're bearish, we're not afraid of green candles forming, even if they're big.
Oh, no,
That's the reason why I teach the way I teach with my stop loss management. I teach all of my students, do not jam that stop loss up. Don't even worry about that stop loss. It's being paid to do its job. Your job is to watch price. Is it constantly giving you instant feedback that you're on side? Is it doing things that is acceptable based on how I teach order flow? Do you see a depth of market over here on the right side? Over here, no ladder or anything like that? No. Everything I've read in these candles is just the price itself. Knowing that it's likely to gravitate towards the levels I've called out here. Focusing on the time of day that it's going to draw down there. What's it doing? It's rolling on those individuals that made money this morning. How did they make money? Being long. So all of this move here is to do what? Remove their chance of profit. But I had my stop loss below the low of the day. It should have never came back down here. And yet it did. It shouldn't do these things. My technical says this. My indicator says that. It shouldn't have done these things. And yet it did. I'm giving you all the insights so that way you don't wrestle with these real concerns. You know, I'm not trying to dismiss them. I mean, they're real things that need to be considered while you're trading. You got to manage the trade. You got to manage yourself. But how do you manage yourself? How does ICT get on here or go on Twitter and feel confident about the things I'm talking about and say, look at this, look at that, wait for these things to happen, and it happens? Because I've been here before. I have an internal dialogue that I'm communicating to you. So that way it'll adopt this comfort. Not completely stress-free, but you'll feel comfortable because you've been here before. And you'll hear my voice in your head, which is what I refer to myself as the ghost of the machine. Your brain is the machine. That's the mechanism between your ears that you're utilizing that comes up with these decisions to get in and get out. But once you get in there, what you're lacking right now, because most of you are new, is you don't have experience. So when you're spending time with me, live streams like this, or listening to my Twitter spaces where sometimes I talk a little too much in colorful language, and I'm trying very hard to stay balanced in this one today. And I'm literally doing everything I can to keep from going off the rails because I am bipolar, and it's very hard for me to do this live and not do that. But these talking points, these things that bore most of the young folks, your youth is a disadvantage for you in that regard. The folks that have been trading for a long time and have had break-even, hit and miss or unprofitable, when they hear someone like me that have spent many years doing this, and I have experience in being able to do it correctly, when they hear that, it fills in all those potholes that they experienced that caused them damage over the time that they tried to make money in the marketplace and struggled, because these things are not, even in Mark Douglas's book, as good as it is, he's not going to tell you how to submit to these ideas, because those ideas that I'm talking to you about, they're mine. He's not privy to that. Market Wizards books, those guys and gals in those books, they're not privy to this information. This is mine. So I'm the only authority that you're going to have to learn from. Despite everybody else out there trying to be equal to me with my own creation, they're not. So you need to listen to me in this regard, because it's going to help you once you are out there in the trenches. When you have real risk, when you have a real potential to blow your account, have drawdown, what are you going to lean on when it feels like you can't breathe and anxiety is gripping you and you just can't stand it anymore and you want to collapse the trade because you just can't hold it anymore? You're not even in a losing position. Sometimes you're going to be in a position where you're making money, and it's harder to even think then because it's just taking off. You didn't have a limit order in. It just started running. Now you're thinking, what do I do now? You learn that by looking at these live streams and spending time with me, because we're not surprised. We're not surprised. Do you hear any surprise in my voice? Do I sound like any of this was a shock? Like, look at this. Can you believe this? We're down here in this new opening gap right here. Who would have known this? How could anyone have guessed that it was going to perform like this? It's old hat, and it's going to be old hat for you. And you'll have these same memories pop up because you've spent time with me. And you'll hear the things I've said during these live sessions that is going to be anchored in your understanding. Your memories are going to be rooted in these endeavors, not from a book, not from a video that I talked about a conceptual idea, static, in hindsight, watching it live over real-time data. That's experience, folks, and you can't fake that. It's either there or it's not. It's either correct or it's incorrect. The logic is sound or it's not sound. And I hopefully have been communicating, at least in my opinion I have, been presenting enough evidence to suggest that there's something different that I'm doing that warrants your closer attention. And if you want to make a lot of money and avoid blowing your account and going through all of the turmoil that every live fund trader goes through and be able to navigate that, you found the right person to listen to. I'm not going to try to sway you with materialistic things. I'm not trying to convince you to get rich overnight quick. I'm teaching you how to submit the time. Submit to a process that's logical, that makes these markets book. What makes these markets move around? I'm teaching you that. You don't have to subscribe to the idea that there's an algorithm if you don't want to. You don't have to. You just use these concepts and say, these things are what I believe in. Fine. If you do that, you're still going to end up in the same place. It's fine. That's what I want you to do. Submit yourself to these ideas and keep the algorithm part of your mouth. Don't even worry about it. If it's a struggling point for you, don't even refer to it as such. It is what it is. But if it's a struggling point for you, just don't even talk about it. Dollar index is flying high here. We've cleared those levels up into that gap I mentioned. That was yesterday evening, New York local time. And the high on the candle at 4:45 for dollar index is 102.58. Am I saying it right? Hold on here. Make sure I'm doing that right. Yeah, hold on. Yeah, 102.58, and we've traded up to a high of. Why can't I see that? 102.63.5. So we had a nice run there. So we traded into buy side. We went into 3 premium arrays on dollar. We took out 3 lows on ES, which is, well, we did not take out 3 lows. We made 3 lower lows. We had this low, which was lower than that one, and then we had this low here. This low falls short of the new week opening gap low. At the same time, we made low, lower, lower low, the dollar index has made its run up into 3 premium arrays. It's the high on your 15-minute candle of DXY dollar on the 445 from Wednesday, 4:45 p.m. That comes in at that 102.58 level. There's buy side there, and then to the right of that high on the 15-minute time frame for dollar index. And I know this part aggravates some of you. Can you just show the chart? No, you need to do this while you're watching, because I'm looking at it just like you are, and you're going to be doing this on your own anyway. But then the gaps that are in the 7:30 and 6 o'clock from Wednesday, those actual gaps there, that's a liquidity void, a real liquidity void. There's a premium array there relative to where we were talking earlier, and then we have the highs formed at the 8:45 low. I'm sorry, 8:45 time window this morning.
That thing's
Which comes in
taking
at
off.
high on 3 premium arrays tapped into, and you're seeing inconsequent for 3 going into the 302. Week opening gap. It could trade this elements opposite. Man. All right, 15-minute time frame. All right, so here's that high here I mentioned earlier. A little set for that. We'll take it to here. Consequent encroachment. Failed to go to the low. Yes, the 50% is consequent encroachment, but you also have 2 other gradients. 75% bid and ask. What is that? Wick. Efficient here. But efficiently. Buy side. How does it offer buy side efficiently? Price has to go back. Consequent encroachment of the wick. Hits it. Complete repricing back up into all of this. What was inefficient here? Buy side. Why? Because it's a down close candle. It's large to the downside. So it's not offering what efficiently? Buy side. How does it offer buy side efficiently? Price has to go back up through this high to that low, offering movement to the upside. That's repricing over top of sell side delivery, but it's inefficient in the form of buy side. So remember that that paint roller analogy I use, where you put paint on the roller, put it on the wall. As soon as you put the roller on the wall, the paint distribution is very thick, it's ample. But as you roll it more and more, it starts to create these little pockets of where paint didn't make its way to the wall, and you have to roll back over top of that. The same thing's happening here. It goes down, but in that movement down, there's going to be small little pockets of inefficiency that you don't see. What does it look like? Well, if we do this. If you are finding this helpful, I would greatly appreciate it if you would give me a thumbs up, because that's an encouragement to me as a mentor, that you're learning from what it is I'm teaching and sharing with you. But we're going to look in this down move here, right there. I'm going to take this little annotation out. All right, what time frame are we on right now? We're on a 15-minute time frame. So we're going to drop down to a 5. We can see that range here. We're going to drop down into a 1 minute. Inside of that range here, all of this in here, what do you see? Let me move it bigger so you can see. In this movement here, what do you see in terms of inefficiency? Remember, that shaded area is a big down close candle. So it's a fair value gap, SIBI, S-I-B-I, sell side imbalance, buy side inefficiency. So what is it missing? Efficient delivery for buy side. So inside of this shaded area, I want you to look real close. Where are the inefficiencies? Here, 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 and a volume imbalance right there. See that?
Oh, I didn't see that
So if we
volume
take
imbalance.
this level here, see if I can copy that. There's your volume imbalance, high, right there. Market traded up into it. It has to do what? It has to go a little bit past it for what? Efficient delivery, because there's a difference between the bid and the ask. So to get that price, it's got to go 1 tick at least above it, right? Well, you're getting that there. Trade's there, and then we can back off of it. So inside of these inefficiencies, you have to drill down into the smaller time frames. And in fact, I'm not going to do it here, but if you have the benefit of using the 30-minute and 15 and 5-second time frames, you can actually look at this even better, like a microscope zooming in. You remember in science or biology when you're in school, and they gave you those things to look at on a petri dish, and you zoom in. Well, the same thing you're doing here.
You're
zoom in
especially
that,
new day
target
opening
the
up here,
actual
and we come
inefficiencies,
right there.
so how far these price
Boom.
runs can pull back up into it. What's occurring at 3 o'clock that causes this? Like, why does that happen? The bond market's closing. So the bond market's closing has this impact on equities. Sometimes it creates continuation, sometimes it creates a reversal, sometimes it creates a retracement and then continuation. You have to know what you're looking for, where you are in the grand scheme of things in a higher time frame chart, and what is still left to be taken in terms of liquidity or trade to an inefficiency. Sometimes it creates a retracement and then continuation. You have to know what you're looking for, where you are in the grand scheme of things in a higher time frame chart, and what is still left to be taken in terms of liquidity or trade to inefficiency. So I've done more than I wanted to do when I first sat with you today at the beginning of this stream. But if it's been helpful to you, I would greatly appreciate you giving me a thumbs up. It doesn't cost you anything to do that. I promise it won't be seen by anyone.
Hey,
No
I'll
one knows
give
me
you a
It's
thumbs up.
completely anonymous. I know some of you are alcoholics and you don't want to admit that you're hanging out with the company of ICT. But I promise you, it would be a great encouragement to me. And I think that's going to be it for today. I think this was a very good live stream. I think it was productive. I would have liked to listen to this as
Alright, I want to go over. I'm gonna go and grab something to eat real quick. I'm gonna grab a banana, and then I want to go over. I want to go over this. I want to go over this fractal. I want to backtest that. Be right back. Oh, I just realized I was muted. But basically, on NQ, this looks nice on the 4 hour. Like I thought we had consolidation here, but really, it's not that bad. Here on the 4 hour, this looks nice because you have fair value gap in, fair value gap out into that higher time PD array. We're sweeping these lows. We're within a daily imbalance. So now we have IRL to ERL possible trade framework. Here's your market structure shift, I guess, or you could do this high. I would more say this high is more impactful here. That's your market structure shift. Then we come back down to this imbalance here, but we leave this balanced price range here. BPR. The only thing I don't like is we don't have like the cleanest sweep of liquidity here, but we did have an SMT at these lows. I'm pretty sure. Maybe let's check that. Is that the 25th? 25th. Yeah, we did. So ES never took these lows here. We left failure swings, and then ES actually came back down and liquidated all these lows, and then we saw expansion higher. So ES was a little bit more consolidative. But if you look at NQ, fair value gap in, fair value gap out. Look at that 50%. Let's use DRT here. Here's your breakaway. Here's your terminus. Maybe, let's drop down. Oh, we almost come back down to that. Look how well that gets respected. Inversion or resistance. Resistance again. Then inversion. Then resistance again. You look at that. We have that market maker model there. If we take this doing range, come back down to equilibrium. Let's look at this on like intraday. We come back down to equilibrium with this doing range. Look at constant encroachment of this fair value gap here. Pull back to equilibrium of that doing range here. Oh. Wow. Look, that's... Then we take this doing range high probability soup there. Come down to 25% of this doing range here. Then we're in the lower quadrant of this doing range. We've gone from extreme. We go from extreme discount to extreme premium. Or from extreme premium to extreme discount, my bad. And then around 50%, we consolidate. We get our stop hunt. Look at the respective 50% there. Come back down to discount here. Silver bullet gets respected perfectly. We distribute off of a new day opening gap, come back down, fall short of new week opening gap. Then we hit new week opening gap. We have a new week opening gap up here. We expand to that imbalance right there. Come back down, new week opening gap. Trade in that, new day opening gap. Come back down lower. Then we expand off these new day opening gaps here. Then we pancake between the new week opening gap here. What are your thoughts on friends that don't want to join your risk on journey and first? What are your thoughts on the friends that like don't want to support you before you take the risk or like when you take the risk? Is that what you're saying? I don't know. I think a friend should support you no matter what. I mean, unless you like if they don't support you, then they're not really your friend. Then you shouldn't even be friends with them. I look. You want to go to like the start of 2024. I want to go to. I want to go to this price action because this is like when I first started getting. It's when I first started, pretty much. Well, not first started, but started taking trading seriously, and I actually have journal. I want to pull up my old journal. Oh my gosh, I absolutely hate this black and white. This imbalance here. We have this low of the imbalance that we fall short of. Well, look at 25% gets respected today. And now this is your swing low. Wait, when do we respect 25%? Monday. Oh, wait, what day is it? Oh, so tomorrow's already spoiled. Well, I mean, I guess I already looked at it, so it's not really that big of a deal. Come back down to the low end of this. Got a big wick here. We have PPI on a Friday? That's a thing? Totally did not realize that. But here we have a fair value gap that goes in. Then we have a fair value gap that goes out. And then we, that's your fair value gap. It's balanced price range. We have mitigation here. Boom, that gets supported. Where's market opens here? Then we have a new day opening gap right here. Price gets supported. Then we have this new day opening gap. Same kind of thing. Fair value gap in, fair value gap out. Balanced price range. Price does not want to go above that. And then we have this fair value gap right here. Then we refer back to this new day opening gap here. 9:50 macro, we really expand, and then 10 a.m. has the expansion candle. And then where do we return back to? To a 15-minute order block right here. I feel like I'm kind of experiment test for them. I shouldn't be thinking that, I guess. In the end, I'm also... So, like, you're trading, and then your friends are like, oh, you do that? And then see if it works out, and then if it works out, then I'm gonna want to trade. I mean, regardless, they're likely not gonna succeed in trading if that's their mindset. Look at that 25%. London putting a low day. Look at fair value gap in, fair value gap out. Oh. Oh. 930 expansion. All the way up to buy side. Oh, beautiful. And we take previous PM session low here. Back into that order block. %25 of that fair value gap. I do want to look at ES here. Oh, that's December 11th. January 11th. Oh, we're on the 8th. That's cool. We'll be right here. We'll be right here. Same type of thing though. 15-minute order block. Oh my gosh, that's just gorgeous. We have lows right there, right above that order block. Oh my gosh. Below true day. Oh, that's like a classic buy day there. We fall short of this, dude. That would have been nice to see. Right at 9 a.m. we trade into that. 9:30 we expand. Reaccumulate. And we kind of just are off the races for all this buy side liquidity. It's a classic buy day. London putting in the low day. It looks like we get displacement lower. See, we come back down to a what? Maybe a 4 hour? Oh, look at that delivery there. Right to 25% of that. Oh, I'm gonna keep that on. Oh, then 50. I didn't even see that. 50% on the next candle. There's cost of for that. There's that 15%. There's no like new day opening gap there below. At what time we trade into that? 9:30. At 9:30, we might have SMT with ES here. Yeah, we do. We have SMT, and then look at what ES. Look at what ES does. Like, look at what ES does here. ES posts a lower low. NQ fails to post a lower low. And then right off new day opening gap. Below true day. We're below true day. We're in a deep discount. We're below 8:30 opening price. Oh my god. Ain't no way. Ain't no way it just did that. Oh my gosh. Right as soon as I typed it out. That's nice to see. That's nice to see. Let's put on those. The 4-hour levels are on NQ. That makes sense. That's why they weren't on this chart. Oh, like look at this. Look at this. We also have a volume imbalance here. Or a block with volume imbalance. And then we have a propulsion. Use a wick because use that wick. Within a 1050 macro. Oh. Within an inversion. Within a Okay, I like this song. Propulsion. Because this is a balanced price range. We have sell side and then buy side. Yeah, I mean that's the same thing with anything in life. Anything in life is gonna take work and difficulty. Anything, like anything you want to pursue is gonna be difficult. And then a lot of people think, little trader with his Rolex. Oh, I'm just gonna get in here and I'm just gonna be amazing. No, you're gonna get frustrated. That's nice delivery on ES. NQ, not so much, honestly. London low. London low right there. 10 a.m. 10 a.m. we trade into that. Into a new week opening gap. With a change of state delivery. Change of state delivery right there. Fair value gap. 5-minute. With a low resistance liquidity signature. Where's market open? Right here. We take these highs first. We take buy side first. Then we hunt back to sell side. And we're also rebalancing this imbalance here. So buy side and imbalance right there. Then we come back lower. Take all this low resistance liquidity signature here then. And we head to buy side. Oh my gosh. Oh my gosh. This is probably gonna be standard deviation to that. Watch. quarter of it tick off. Yeah. Just beautiful algorithmic display here. It just keeps on getting better. It just keeps on getting better. There's no way this swing lines up. There's no way. Because this is perfect. This swing high, -2 is perfect. Okay. It had to be a little bit off. Can you imagine though? Wait, let's see. Let's try to cherry pick these. Not happening. Not happening. Let's look at this though. We cherry pick this. Nope. Oh my gosh. Just beautiful. What's the economic calendar look like on this week? PPI. Wait, CPI. This is day before CPI. And then it's PPI. Beautiful. Right there, new week opening out. Okay, let's look at ES. Oh, did I mess up? Yeah, I did. I actually switched over. It's this. Well, CPI displaces. Here, let's just. Well, we can watch him paint. Let's see how ES delivers here. Oh my gosh. We form SMT here. Then we also have SMT here. ES never takes us low. SMT at the higher time repeater rate at a certain time after ES is delivered off of these, and then we get displacement through new week opening gap. Then we come back down here, and then we reclaim new week opening gap at a certain time. At a certain time. Then new week opening gap high, then boom. Oh my gosh. It's beautiful. It's beautiful. It's gorgeous. It's gorgeous. It's gorgeous. It's gorgeous. And look, sorry, look at the high. Look at the high of the day. Look at the high. I mean, surely it's the high of the day. Look at it. Look at it. CPI. Yep. News is random. Maybe. I don't know. This could just be evidence. Again, what do? We come up, liquidate buy side liquidity. Look at the bodies. New week opening gap. New day opening gap. Oh my god. It's beautiful. Beautiful. Then what do we do? What do we do at 9:30? Where are we quick to reprice to? New week opening gap, but oh, we don't take buy side liquidity. But what are we doing? Oh, rejection block? No, new week opening gap. let's look at ES's delivery during this high impact news event. Yeah. Yes. Makes sense. It's just fair value gap with new week opening gap. Constant encroachment? 75%? No, it's so you have 930 permitting to trade lower. Fair value gap in, fair value gap out. Institutional inflow entry drill within new week opening gap, new day opening gap. Then we have sell side resting here. More sell side that rests within here. We fall short of new week opening gap. Then we retrace back up at 10:30 into this area, into this breaker, into this fair value gap, into maybe this wick. I don't know. I'm not gonna measure that. Actually, let's do it. Yeah, into constant encroachment of this wick. Wait, that's actually constant encroachment? Oh. Constant encroachment of that fair value gap or that wick. Then we trade right back to new day opening gap there. It's just same thing day after day. So I will say, whenever we do trade into a new day opening gap, we expect constant encroachment. I mean, I feel like when you're trying to get highs, just wait for this change of state delivery here. Change of state delivery, fair value gap, boom. Like here, we have change of state delivery right there. Fair value gap. See, like here, you could have been looking for an entry here. You would have got filled, but you failed. Well, this fair value gap right here is why we don't want to trade lower, you know. Okay. Next. Come back down to this 15-minute fair value gap. Ooh, a little bit random, you know. I think constant encroachment is like, oh, beautiful. Beautiful. Right at, oh, I wish it was 9:30. Where's 9:30? Wait, we have PPI here. 9:30. 9:30 is up here. We have 15-minute change of state delivery. 9:30 SysD. And boom, we seek right there. Look at that 10 a.m. silver bullet. Right to new day opening gap. fair value gap. See, when price gets here, you can look for is change day delivery. We get one right here. When we're in new day opening gap, change day delivery. There could be something on the 1 minute. Oh, I can go to the 3 minute actually. We have change day delivery, immediate rebalance up to where buy side. You could have been looking for new week opening gap, but say you take partials, because you should be taking partials, or at least I should be taking partials right there. That's a high right there. Then we fall short of that. We have another new day opening gap, change day delivery, and then there could be something there. Big displacement from that new day opening gap. And we trade right back into that order block to offer fair value after this displacement. And that's paired with that new day opening gap, so that could be a nice draw on liquidity. Oh, I now. Oh, I'm still on that same time frame. I thought I was gonna get messed up there. Wait, I'm still on Thursday. Wait, did I skip a whole day not looking at it? Oh yeah, I didn't even look at this day. Oh. Yeah, the high of the day right at 9:30. Very nice. Wait, we have a bank holiday Monday. Not really anything crazy on this economic calendar. 3 a.m. post the low. 9:30. Come lower into this order block. Oh, nice institutional order block. Constant encroachment. Oh, we liquidate these lows within that fair value gap. $9.30 is right here. 9.30 is right here. What are you looking for? Low resistance liquidity. We have a low resistance liquidity signature here within price. And we come back down into this order block, into this fair value gap. Remember, we're looking for overall. What is price doing? Well, we're bullish on higher time frames. We've come back down to this order block right here. So now, once we frame an order block off that, That becomes a propulsion block. Order flow on the higher time frame is bullish here. So we come back down to that level. Fair value gap in, fair value gap out. Right here. Do you think I could go down to the 2 minute, or you think that's too risky? Then we have a fair value gap here on the lower time frame. Barely touched. Boom. New week opening, new day opening gap, and then boom. Hot. Where are we looking for? New week opening gap. And we come back down. Oh, we have big displacement lower, and then we come back. Now we're in a sell program. Now we're gonna respect that. Come down to where? New day opening gap, and then we put a low in here. And I would think, let's see if this 218 low is that a new day opening gap or new week opening gap on ES. That's gonna be crazy. So Tuesday, January 24, 218 low. 218 low. Wait, it's okay. It's the Tuesday. It's Tuesday. So we gotta go to Tuesday. Monday, Tuesday. Oh, it doesn't look like it. 218 low. It isn't. So my theory was wrong. It is in sell side liquidity, so we did have an SMC. So is it another type of PD array? Let's look at YM. I lucky want to look at YM. Is YM 218 low? Is that it? This isn't big. Oh, yeah, I see. Tuesday 218 low. Of the 12th, or it would be the 13th, I think, or 14th. So we're seeing if this is in a new week opening gap or new day opening gap. Where's replay? It's right here. It's not. Okay. It wasn't. Good job, bro. Thank you. Then we have that change of state delivery here. Let's look at the 5 minute. 5 minute. I mean, you could use this as an orb. I'll just say all these three are orb block because they are. I usually like to refine it to the one, but if there's not a big one candle here, I think we could use these three up close. We come right into that. Maybe a 1 minute fair value gap, but I won't get data for the 1 minute. Oh, I get 2 minute data. New week opening gap supporting price here. But then we go back up. This is the current new week opening gap. This is the current new week opening gap. The blue one. And look at this, look at this, look at this. We break through it with displacement. We don't have any imbalance. The last imbalance we had was this one right here. And look at that. New week opening gap. Respected perfectly. Oh, then look at sell side. You have a low right there that we barely purged. What time is that? 11:50 macro. Beautiful. Okay, let's go to the next day. New week opening gap, new week opening gap. Oh, that's kind of sick. This indicator, 2 degrees makes some nice indicators. And look at this. You have order block paired with that new day opening gap. And look at this. You have a fair value gap here on the left side. With this fair value gap, you have a sensitive fair value gap right at 930. 930, we just have displacement lower. Let's see if there's a little divergence there between NQ and ES. 10 a.m. we get a reversal. So NQ makes a lower low at that 930. Yeah, we have SMT there. I think actually I don't know. $145 low. Okay, so we also have SMT there. High probability long there. Boom. Up to buy side. Up to this imbalance here. You can refine it to this. $930, we create a higher high with $925 high. Yeah, so we did have SMT here. SMT within this 5-minute fair value gap. Within a new day opening gap. I know it's a very small one here. And then also within this inversion here. Probably 10-minute inversion, 5-minute. Right there. Boom, displacement. Look. Bodies. And then boom, we head down here. At the same time, ES trades into this new week opening gap or new day opening gap. We have a change day delivery. New week opening gap, new day opening gap. We have a 5-minute order block here. I just sent a chat. What's your strategy? I trade ICT concepts. 50%. Boom. Right there. We don't take buy side though. Come back. Fulfill that imbalance here. Come back up to buy side. Lower. Come back down to this down close candle. I see. This is nice. So we have equilibrium here. Equilibrium. We come back. We have a stop line at equilibrium. We have consolidation at equilibrium. I'm expecting this to be the silver bullet. I'm expecting fast expansion here. Let's just play this. Yep, fast expansion at the silver bullet in that fair value gap. To buy side, we have failure swings here. Nice. So that classifies this as a buy day, but we want to retrace that fair value gap into 75% of that range. You know, you feel me, Yerd? Here we have this terminus gap. Pretty much coming to that 25%. That's what we're doing here. Oh. Straight current new week opening gap, fair value gap there. It's just beautiful, ain't it? Just beautiful, ain't it? Change state delivery here. After this, we have a balanced price range. We don't really need to trade back into here. Notice we also are in that silver bullet territory, so we're within a hurry, and then we are. Where's text? Okay. Okay, let's see if we learned anything from that. Have the breakaway gap, or yeah, 25% gap. And then we go to this gap. Then in the consolidation, premium discount. Oh, I did not mean to do that. People actually use that? Are they able to? Notice how this dealing range, 25%, lines up with 75%. Then we go from premium to discount. Deep premium to deep discount. Therefore, we can look for soups here. Soups here, back to discount. And then we take discount soups to premium. Then we consolidate around equilibrium. Premium, discount, premium, meander around premium, back to equilibrium, back up to discount, back up to premium to take buy side, to come back down to discount to take sell side, to come back up to premium, come back in here, And look at that. With new week opening gap. Ooh-wee. And that SysD. Boom, we're up to buy side. So we put high day, -1. Price is in a hurry to come back to that level to then reprice higher to further buy side. We have all this lowers this liquidity. Morning session is not good, not a good trading day. Is there a reason why? Well, we did have a kind of energetic overnight session. We had a nice overnight session. How many points was this? About a 200-point overnight session. I mean, nothing like crazy. Look at that new day open. It's a very small one. But look at it. Delivered. We have a soup here up to buy side. Alright, let's just play out this. Woo! Found support right there at this previous high. High broken support. It's in line with this fair value gap. Right at 9:30. And boom, we have this auto block on the 15 minutes. Right there, we won't have any new week opening gaps or new day opening gaps to reference because we're an all-time high. If you look at this PA, it looks pretty similar to the ones that we just had yesterday. Or Friday. Not yesterday, but Friday. Like, we have just big energetic price run. -2.5 maybe lines up with that. Yeah, we're in that -2, -0.5 area. And yeah, we're just displacing here. I mean, when we're all-time highs like this, you gotta refer to other assets like ES, NQYM, and dollar when we're all-time highs. Look at that delivery. Look at that delivery. Oh my gosh, you have all those confluences, but basically, and it's like kind of hard to see it in real time because you're not. I feel like what I gotta do is I really gotta like go in. I really gotta do a lot of analysis before the day. You know, that's something I need to get better at. But look at that beautiful delivery off that new week opening gap. I want to see. I do want to see. I'm just gonna fast forward. I want to see if this hourly order block gets traded into, because that would be a pretty nice confluence with those new day opening gaps right there, and that's a nice order block with a fair value gap. No, we don't. We deliver off that new day opening. Well, yeah, I mean new week opening gap right there. Look at constant encroachment of that too. Oh my gosh. We're just building in a premium here. Wednesday, Judas. Here we come up. Barely purged buy side. That's that 9:30 Judas where we barely purged buy side. We're more likely to have a large sell day after this, but we're in all-time highs. That's not what happens. We have a fair value gap in, fair value gap out here. Where's the low risk equity? It rests right here. It's kind of what we take. Other than that, we don't really have much else. Maybe an hourly imbalance. Hourly imbalance, yeah. Oh, I thought that was. I mean, that's pretty close. But look at -4. Yeah, like -3.5, -4, kind of. Look at that. Just consolidation that day. We come down, sweep sell stops. And kind of just consolidate. I mean, overall all-time highs, non-favorable price action. Notice this dealing range though that we were just held within. We consolidate right around equilibrium, and then once we get displacement, to show institutional sponsorship, finally, we come back, new week opening gap to get a buy model. Once we get new week opening gap and new day opening gap, and then look at that 50% of that. The thing about this, like we've already taken sell stops. Price doesn't really want to go lower. It's just more favorable that we hit the buy side. Just the market structure that we've had, it would just make sense. And then once we get displacement, then we retrace to where? Perfect level here. And then we have an order block there. 50% of this dealing range here. And we have buy side left up here. Like we've already taken buy side. And we have just failed to go lower. Failed to go lower. Failed to go lower. Failed to go lower. We might have SMT here. There might be an SMT within the market that might add a confluence. I want to grade this order block here. I don't even know if I would really call this an order block. How many points was that within one 5-minute candle? Only 70. Well, I mean 70. That or like 67. That's pretty impressive. I mean, here this might get you stopped up. Like we swept sell side liquidity. Notice how we had just big fast move lower and then big repricing higher. We just consolidate. Because we just had big move lower, big move higher. Not big move higher, but kind of like an equal move higher. So we're gonna consolidate to then complete this market maker model. Well, recently I've been just backtesting price. I don't currently have a strategy. I've just been reading price. Negative 1.5, negative 1 to 1.5 is usually standard deviation for manipulation. Negative 4 is usually distribution, but here then we have negative 1, 1.5. Let's see this. If this is negative 4. Oh. Maybe negative 3.25 or 2.75. So we liquidate sell side, we get displacement higher. And then we have order block here. It's a little bit tricky when we're at all-time highs. Then we have a measured standard deviation move of negative 1.5. Nice, nice. Welcome, bro. Welcome. $15-minute Chinese stay delivery, 15-minute order block there. Oh, we don't have a change state delivery here. We have a change state delivery here because this is just trading back in its order block. But here, we actually get a change state delivery. We're just trading back in that order block there. But here, we actually have displacement. And overall, kind of mediocre day. I mean, like, these are like some conditions that I don't really want to trade in necessarily. Okay, let's look at 10 a.m. though. So 9:30 we open, and then we reprice to low resistance liquidity that exists within the market. Then at 10 a.m. 9:50 to 10:10, that's your macro. We have a fair value gap in, and then we have fair value gap out. We have a balanced price range here. This in itself at 10 a.m. could be a model. Then we have fair value gap here, sensitive fair value gap. We come back down, reprice to that, and then we have now this that exists in the market. And then once we change our state of delivery, we respect that. We now have another fair value gap that we can take to buy side. How many points does that offer? 8 points on ES. Nice. Nice silver bullets. Come back, order block, boom. Look at this. Nice body here. You could probably use all these candles here. It's probably a 5-minute order block. Order block. Then we have buy side that rests just right above here. Then we have a propulsion up to buy side. Then we come back down, head to sell side here. I mean, look at where ES delivers straight, or NQ straight delivers to on news. What type of news is this? PPI maybe? unemployment claims, and then advanced GBPB. So we just had 9:30, 8:30 news. 9:30 opens here. See if this. Let's see. Let's look at this. So we have this high to this low. Back at equilibrium. Here we have the, oh, look at that. Alright, normally I wouldn't ever pay attention to this gap, but I want to see. Oh, it's right within that new day opening gap. I have the, not like premium. I just have the like $15 a month version. And what I did is there was like a deal for like, it was like $90 for a whole year, and that's what I just bought that because like I use TradingView, and I use TradingView, and I have YouTube Premium. Those are like the main things I got. Cause I don't know, I use YouTube a lot. Like as you guys have seen, if you guys have been in here, I use YouTube a lot to watch lectures and to watch other things of that importance. And then I just decided to buy it. If MMXM is everything, so please backtest MMXM and share to us. If you look at my YouTube, I have some backtesting. If you go to my YouTube, I have some backtesting on that. I have a market maker buy model here, and then we have PM market maker buy model. Should I do more market maker buy models? Daily market maker model. I might do more cases. I mean, like in every one of these, there is a market maker model that I go over pretty much. But these are just my interpretations of price. Just keep it clear. My video still hasn't uploaded. I'm kind of mad about it. I had a whole like 19-hour stream that just didn't get uploaded yet. And I want it to get uploaded. So like here's gonna be a market maker model. We consolidate around equilibrium of the market maker model here. Alright, from here to here is a market maker buy model. We displaced through 50%, so we're likely going to head to terminus. At 75%, that's when you have your silver bullet. Oh, I can't go any lower. But basically, you have your 2-minute order block right here, smart money reversal. Then you have your low risk entry here on that order block. Then you have first stage of accumulation, second stage of accumulation up to buy side. So it's like it's fractal. It's fractal. I mean, this is market maker buy model. Smart money reversal, low risk entry, first stage, second stage. I don't like to say like, oh, this is low risk entry because it's kind of subjective, but we'll say accumulation, 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 up to buy side there. Anything on the left side of the curve can be used on the right side of the curve. So what do we have here? We have this up close candle here. You can use the wick. It's a breaker. Particularly, yeah, this would be your breaker. See how we respect that there. This could be accumulation. Because but here the hierarchy of the fair value gap is missing. How to anticipate that? So a good way to anticipate market maker models is based off of dealing ranges, off of implied dealing ranges. And I would recommend looking at DRT, dealing range theory. Look at Ali Khan on YouTube. I was watching it earlier. I just finished that series. That's what I would recommend watching. All right, let me take buy side. It's just lovely. Look at where we put the low of the day. And this is a market maker sell model right here. Look where we reject from, negative 0.75. So I think this could be a high probability soup. Wait, let's see. I want to see if is that a stop hunt or no? No. -3. Yeah. I kind of did it here. Here's your breakaway. Here's your measuring. Here's your terminus gap. But we come up and we don't actually complete this market maker model. We end up respecting this terminus gap right here. Because here you have 0.75, 0.5, and then 0.25 from this high, from this low to this high. Wait. If we deliver, wait, let's see. If we delivered a -4, that might actually be crazy. So here's your breakaway, or here's your measuring. Here's your breakaway gap. I mean, it's not, we don't really have like a clear one. You could use this one. Here's measuring. That's what you can use on the for the right side of the curve. And notice here where we tap right here, equilibrium. This dealing range, we tap it perfectly. On market opening days, do you trade on live market or backtesting only? I'm gonna start like next Monday. What I'm gonna do is I'll be live probably before market opens, and then we'll do some backtesting before that. And then once market opens, I'll be tape reading per normal. But then that's just all gonna be one stream, and then I'll be live for like the whole day. I think that's what I'm gonna do. And then like of course I'll take like some breaks to where like I might like go out for like a walk or like touch some grass, and then I'll come back. But I might just do that while I keep the stream on because I kind of want to just keep the stream rolling because I don't want to end stream and then restart streaming, or I could just end stream and then not come back like yesterday. Negative 0.5 there. Market opens, we take sell side, we run up to buy side into new day opening gap. We engineered a high right below that, and we come into that, and then we break down, change our state delivery. We're now in a sell program. We come in here, we just place through that. We come back up to a new day opening gap, and then we reprice lower to where new week opening gap right there. When do you expect the market maker model to fully complete? Once we've hit a draw on liquidity. So like if it's, this is just my interpretation on it. Like I'm just a student like you, but basically once we have this, and then we have our change of state delivery at a higher time repeating rate, we're now in a buy model. We're now on buy side of the curve here. Now sell side of the curve, and then I expect that once we've taken these highs. Like we could go past that. We could keep on going past us, and this could just be a market structure shift on the higher time frame. That's all this can be. And we can still go past that. But I'm confident that we're going to go here. So that's what I'm going to trade. Because like we don't know every market move, and I don't think that's realistic to think that you're going to be able to predict every market move. Yeah. I mean, I never really trade Forex. I've never really looked into Forex, but from what I've seen, what I've heard from ICT, Forex just has its moves the exact same, but it has just certain characteristics that are different. Have you found Enigma? No. No, and I don't think that. I mean, maybe, and I don't care to learn Enigma, especially right now, like, or think that I can get to that point. I don't even know what it is. It's like his algorithm that he has or what? All right, so we just liquidated sell stops here. Let's see if we expand off of this. Is that FOMC? Yeah, we did have FOMC. Look where we delivered right on FOMC. I mean, I don't know. I feel like I feel like there's sufficient evidence suggesting that we want to price to new day opening gaps or new week opening gaps on FOMC. I think there's sufficient evidence, and then we came up there and we left failure swings within the market. And that's that current new day opening gap too. Fair value gap in, fair value gap out. Institutional order flow entry drill because we have a balanced price range on the 3 minute. Oh, we can't go to the 1 minute. How many points does this offer? One 140. 140. I mean, 140 points. That's a lot. That's a lot. Within the FOMC, I don't know. I'm not a big advocate for trading FOMC. I mean, I think like once you backtest it enough, yeah, and you're comfortable with it, but I don't think that. At least I'm not gonna try to trade FOMC until like I'll just like backtest it and study it for at least like a year or two, like 3 years probably. But I'm not gonna try to just trade FOMC honestly. Like I think that's stupid. For me, where I'm at. But it's very nice to see that. New day opening gap. New day opening gap. Expansion. This is probably earnings. Oh, was this when Nvidia had earnings? I remember Nvidia had earnings. Yeah, I think this was when Nvidia had earnings. I think. I remember there being a time, or maybe that might have been later on, but there was a time Nvidia had earnings and it's absolutely ripped. But even here, is it really like anything? Is it really like random? I don't think so. Personally. Look at that, right off new day opening gap up to this new day opening gap. I'm sure the wick colors a little bit. Oh, even the wick goes pretty much to that low. Day after FOMC is lackluster. Like this is I'm coming to a new day opening gap here. That's just yo. Why is it like that? Oh nah. I'm trying to make my camera bigger, but it's making it smaller. No. I'm gonna have to have like a small face cam now. Why is it doing that? No, I just messed up my my streaming thing. Sorry, I'm having difficulties. There we go. All right, I'm finna end. I'm finna end stream. We'll end it on that. Right at 9:30. Wait, let's go into this. Fair value gap in, fair value gap out. Maybe constant encroachment of this inversion gets respected. No, not even close. That would have been nice. Well, we come back down to this new day opening gap. New day opening gap, constant encroachment. Very nice to see. Anyways, I'm gonna head out. I appreciate y'all, and I will see you guys tomorrow. Tomorrow I'll be live longer. Just Sundays, I go to church, and then I got family things I kind of do, and then kind of just like there's gonna be tomorrow. I'll be back tomorrow, and like throughout the week, I plan to be live like a little bit longer. Like I'm saying, like I kind of just want to just chill, like you know, it is kind of it's kind of good and bad because like I'm inviting criticism into my own trading. Like anyone could just hop in here and be like, "Oh, why are you backtesting this? Why are you doing this?" But I really don't care. And I'm just here to chill. I'm here to vibe. If you guys want to just come in and backtest, you know, this is a place where I'll be backtesting my own convictions on price. But I think the best way to backtest is definitely do it yourself. But yeah, I'm gonna head out of here.